All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. Today has been a pretty crazy day. Today has been an absolutely freaking crazy day. We are hitting all-time highs on the S&P 500. At the same time, we are hitting some pretty ugly inflation prints from this morning with CPI. Market doesn't care. 743.57. What a freaking day across the entire board that we are experiencing right now. Lots of different headlines, a lot of stuff to talk about. I know there's honestly a lot of confusion for why the market continues to go up in the face of semis, but it's almost like, I think the kind of theme today is it's almost like people are trying to hedge against inflation by buying stocks, specifically semiconductor stocks. It's almost like everyone's accepted, yeah, inflation's there. It's going to be ugly. It's not going to be fun. But the way to hedge against it is to buy stocks and buy semis and buy tech. And that's kind of the thing that we're seeing right here. Google, 403. First time we're seeing really Google get above 400 and stay above 400. Maybe Google is actually going to be able to close above 400 today, which would be incredible. Nvidia got to 227 today, 226 right now. Still a great day for Nvidia, up 2.41%. You got Palantir in the software names that could not catch a bid. IGV, that's down about 0.67%. Palantir is down. ServiceNow, CRM, they continue to go down. 87.66 on ServiceNow. CRM also at 167. The names that are up, your tech stocks and your semiconductor stocks. Apple hit above 300 today. Apple 299.26 as that one continues to go green as well. This hit 390 at one point, 300.90, but it's down right now from those levels, 299.23. Obviously, Apple and Google helping the S&P reach new all-time highs along with Nvidia. Even Meta kind of came up a little bit from the dead. It was at 595 in the morning, 616 is what we've got right now before we get into the close. Corning as well, 207. Micron had a little bit of weakness today at like 785, and that rebounded as well, and we're back at 809. So the party continues, the growth continues, the market is continuing to move on from some of this fear around what is going on with oil, and I guess that is how we're going to have to navigate it. Oil is still up on the day. I mean, it's still down from, or it's up from yesterday, down from where it was in the morning, down about 1%, still above 100. Once again, it's almost like the market is viewing the CPI and PPI as oil related. And if oil is inevitably going to come down because the war is inevitably going to come to an end, that we shouldn't put that much pressure on CPI, PPI in terms of worrying about it, which is not that irrational when you think about it. But it is how the market is, I think, perceiving oil, or at least perceiving the inflation issue. And that's why we're probably not having to deal with as much pain right here. I did buy a stock today and took a trade. Ironically, took it out right before the breakout. We've been talking about this for the past couple of days, and the stock was Nokia. 1398, bought it before we got the breakout. I think right now it's sitting at 1470, 1468. There is a thesis on Nokia that we will get into, but the kind of core reason, and I kind of talked about it in the morning and basically convinced myself, is the option flow. I mean, this is number 4 in the most traded stocks around options in the entire market, which is kind of insane, right? Like, it's Nokia. It's not Nvidia or Apple or Tesla. It's Nokia. 737,000 calls versus 122,000 puts. And I've been seeing this trend around the option flow over the past couple of days. So, I mean, that was the idea here. Let's see how far it goes or what type of momentum happens. But the fact that it's up 11% from this buy in a day, I don't know, man. This is a market that's feeling a little crazy to me. I was talking to a few friends today, and part of what these guys work in the tech sector, and one of them was just like, dude, it feels like 2021 X semiconductors, which I think is kind of a fair point. It's like, if you're not in semis, then it feels like everything is kind of melting down. If you're in semis, it feels like everything is melting up. And it's also like the market is using that as a hedge to be able to make an argument around why semis are going up. The bull case is also Jensen. Yeah, you also had Jensen invest in Nokia, so I guess that is part of the thesis. But at the end of the day, the types of moves that are taking place right here, even Nebius, I mean, just a phenomenal earnings. This thing got up to 217, now it's at 208, still up 16% for the day. I think it's making a lot of people wonder at what point does the money rotate out of this, or does the money need to rotate out of this? And right now, I think people are realizing the money might not have to rotate. BlackBerry, that one's down to that 82%. It had the momentum last week. It does not have the momentum this week. ASTS was down 12% on Monday, 75.13. That now is green, up 3% on the day. Rocket Lab hit freaking 127 before taking this tumble right here from 127 to 124.72. But it's just massive, just absolutely massive with the green that we're seeing. Yeah, Palo Alto also had a pretty green day as well. Look at that, 5.9%. Cybersecurity names starting to come back, and Fortinet kind of started that trend off last week. The other thing that was super important that happened today is we had a 54-47 Senate confirmation approval of Kevin Warsh. So he will now be the 17th Fed chair of the Federal Reserve. And he's entering into economy with the highest oil prices since 2022, rising inflation, and a stock market that is running hot on what controls 50% of GDP growth, which is AI Capex. Capex can't slow down because that means the economy slows down. If Capex slows down, the entire stock market theoretically would collapse because the majority of the gains in the stock market are rooted in the semiconductor stocks that are basically rooted in the Capex momentum. So, I mean, at this point, it's really just a question of will the Capex slow down or will it not? And will it be deflationary enough for Kevin Warsh to potentially cut rates? Or is inflation going to creep back up? And again, it doesn't seem like inflation is his biggest concern, given he thinks we're going to be deflationary, but that's something we're going to have to see as we get into the end of the year. Meta right there, 615, as that one continues to go green as well. Again, I think this market, you have to also ask yourself, how much of an investor are you versus how much of a trader are you? There are plenty of opportunities for trades that are out there, given the volatility of this market, but there's also plenty of great long-term investments that are showing up. There's also plenty of companies that are not doing well this year, even if though they will be really good long-term investments, like your Microsofts, your Metas, your SoFis of the world, that just aren't moving this year, which means there's not as much flow coming into those names. Enphase and First Solar caught a bid today on Enphase's new microinverter packaging today that they released, and the street really likes that. So that's getting solar panels all up on the day. Celsius goes down another 5.8%. I understand it's frustrating. I get it. It is not fun to see good fundamental companies, because they don't make chips, just not catch a bid. But I mean, what do you do, right? This is kind of what's happening in this market. AUR, that's up another 17% on the day. Aurora Innovation, that was actually down a couple days ago. That's catching a bid. Peng, that's up 9%. It was at 54. Now it's at 48, but it was up. And then Wolf, which got highlighted by Citrini the other day, that one is still up 17%. Oh, you do have LWLG earnings. This is another photonics play. This name went from 4 to 18 in the past 2 months. So we'll take a look at their earnings and we'll see kind of what's going on right here. Reddit had a relatively ugly day, fell all the way to 150, now back to 153.85. So this one kind of holding on as much as it can, but this one's also been taking a hit. AppLovin still down 8% of the day, would not get any level of love. We have USAR as well after the bell, so we'll take a look at that. And then AAOI, I think, got to 230, 222. It hit 233 at one point, another 18%. I mean, yes, it feels a little wild, but this is the nature of this market. And if you're feeling the FOMO, I think the easiest thing to do right now is just tell yourself, if you missed a trade, you missed a trade. It's okay. And if you want to take a trade or take an investment in some of these names, then, you know, my simple philosophy is you have to be okay with DCing if it goes down, and with a trade, set a tight stop loss and move on from there. But 1000%, I think it is obvious that people are feeling very weird about the nature of how this market is playing out. Nvidia right there, 225. Now, here's the thing. If Nvidia crushes earnings and we get a peace deal and oil comes down, I feel like this is only going to get crazier. I feel like this is only going to get crazier. I mean, the fact that the market pumped on Nvidia last night going to China, or Jensen going to China, and that was enough for the market to be excited. And then you have the Cerebras IPO coming out tomorrow, which is a whole nother catalyst to get the market excited. It's just one of those things where it's like, okay, this is what we've got, and this is how the market is interpreting it. Bank of America on their tech inflows. Clients were the biggest buyers of tech, largest since mid-March, with tech on track to post 50% year-over-year earnings growth. So Bank of America is also making the point that says, hey, our clients are buying, and they're buying tech pretty aggressively in the face of some of this momentum that we're seeing to the downside. Here was Liz Young today on her thoughts on PPI versus the stock market, and then we'll keep going from there.
You've seen this already with the change in sector leadership since this morning. We finally have inflation numbers that are starting to make people worried about a growth scare. That hasn't really been the case up until perhaps now. So if we have inflation that's sticky enough and higher than anybody expected, you start to worry that consumption gets hit both on the consumer side and on the business side. So what do investors do when there's a growth scare, when growth in the economy might be scarce?
Buy tech.
Exactly. They look at tech
That's what
stocks.
they're doing. Yeah,
exactly. But when the market opened today, right after we got this inflation print, you saw things like consumer staples and healthcare doing a lot better. So we've already gotten off the defensives train and gotten back onto the tech train. So there are two separate things going on. And I think the way you open the show, exactly right. Tech is winning still.
Clients are, according to bank.
Tech is winning, and tech might be winning for the pure reason that the market is buying tech as an hedge to inflation. I know that sounds super ridiculous and crazy, but that might be kind of what you're seeing right here. S&P 742. Put in the chat if you feel like it's getting a bit too euphoric. In fact, that's a good poll to do. And then put in the chat if it's not feeling too euphoric. Again, I think there's two perspectives to this. Euphoria, because everything just keeps going up and up and up in the face of really bad news that we keep seeing. But everything is going up and up and up because the earnings growth also makes you feel that it's okay, right? We've never had the type of earnings growth that we are seeing. And maybe that's all that matters. So euphoric, yes or no? And, it's not like it's the unhealthiest thing in the world for it to be euphoric. There's always a level of euphoria that comes out in a bull market. But I think people just, if it comes down to, do I buy stocks now and we're in the midst of euphoria, is waiting a better game or riding the trend? And if you bought, back in March and April, then maybe you really don't have to do anything. Maybe little trims here and there, but nothing that necessarily needs to be done. Given the buying of the dip ended up working out for most people. Reddit right there, 154.37, app Lovin, 453.75, AAOI 223, S&P 742.50. In the next 2 seconds, we are going to close at an all-time high, 742.37 on the S&P. The stock market is now closed. We will get HUD metrics in the next 5 minutes as well, so we'll be looking at that. And we will be looking at some of the earnings that we have out here as well. S&P 742.37. That's where we have ended off the day. We'll also have Sam joining us in about 10 minutes, and he'll come on the show and give kind of his thoughts on what he's seeing in this market right now. 742.37 on the S&P. Palantir closed on the day 130.05, just above the 130. Celsius 27.86, that was down about 2%. Meadow, that was up 2.26% on the day. Nebius, again, even though it fell from 217, just a massive day, right? 15% up on the day. $30 went from 80 to 207, basically in a month and a half, which is pretty incredible. Nvidia closes at an all-time high, 225.83. IGV 88.65. That one was down on the day. That was up on the day, but down from where it was at the highs. 87.09, 214 on ServiceNow. TSLL. Tesla actually broke out to 455, then came back down to 445, but you did have a little bit of a breakout on Tesla, which was fun to see. Caterpillar 90205 as well. HIMS 2414, that was down about 3%. Again, yes, I bought Nokia. It is more of a trade than an investment. Bought in at 1398 right before the breakout. Main thesis was the option flow. I don't know if it becomes an investment or not. I think there is a thesis to it, but in this high flying market, it could go down 10% tomorrow if Micron goes down 5%. Like, all of these semiconductor names, in my opinion, are moving together, and you could easily see a retracement to the downside. But we are in with Jensen, right? That's also part of the thesis on Corning as well, as Nvidia continues to invest in more of these companies. APLD, that stock was up about 3.35%. Microsoft, did we close below 400? 405. We got very close. We got to 401. 405 is what you have right now at these levels. CoreWeave is at 111, up 3.31%. Someone says, I think this market's going higher. Someone says we're going to have the biggest crash of our lifetimes. Be prepared. That's how, this is what I mean. That's how crazy this market is. You've got one side of the investor base saying this is all a joke and we're all going down. You have another side saying we are going to continue pumping higher. This is the greatest time ever to be an investor. And I think it's very hard to call exactly the approximate reasoning on which one is necessarily right or wrong. But obviously the bulls are currently in control. Tesla right there, 445. Earnings. Okay, let's see what we got. We should be getting them pretty soon. We have a few companies to look at. LWLG, I know that's in the photonics place. I do not own this one, but it has made a massive move. We're going to see if this one ends up going higher. That opinion depends on if you're green or not. You know, there's that famous quote that it's always a bubble for someone who's not in the market. So there's also a fair perspective from that. And then you have USAR. Cisco. I forgot we have Cisco today. That's another big one. Networking. Cisco. Let's see what they have on earnings. I think the market is definitely going to be paying attention to this one. And then we have the Robinhood metrics as well. We'll see. Cisco don't have their numbers yet. That should be soon. The issue in big tech is that they can potentially increase the revenue with using AI, but they surely are making revenue from selling compute, so not allocating internally. Well, the other thing is I think big tech would rather lay off people versus cut Capex. And, you know, that's the ruthlessness that we've been seeing over the past couple of months. And if that continues to happen, maybe big tech keeps running it hot, which keeps the AI trade going if Capex goes up, but obviously will result in more job losses, which ironically might be the reason we get the rate cuts, because that labor market weakening would be enough of an argument to say AI is literally becoming deflationary, not because there's more products and goods and services and because there's more supply and that reduces the cost per item, but because people don't have a job and so they can't afford a lot of this stuff. So companies have to lower prices in order to compel people to buy their products. Like that could be a central point of how this story ends up playing out. Nebius down a little bit right here. After hours as well. Oklo, was this down on the day? Oklo, yes, lost 70. They did not have the best earnings yesterday. I mean, it was same zero revenue, lost 18 cents, fell from 73, down about 5.3% here on the day. Okay, Cisco, did we get a pump on Cisco? We've got a pump, 5%. Let's see. Did they sign a new deal? Did they increase their Capex? At this point, any of those things can get the market to be pumping. Okay. So Cisco third quarter adjusted EPS 106 versus 104. That's a beat. Fourth quarter adjusted EPS 116 to 118. That's a beat from 107. On the guide. They're raising their expected fiscal year 2026 orders to $9 billion, up from $5 billion. That's your big beat. Fiscal year 2026, raising the guide from $5 billion to $9 billion on expected orders. Revenue, they came in at $15.84 billion versus $15.56. That is up 12% year over year. EPS 106 versus 104. That is up 10.4% year over year. Cisco, obviously really important in a lot of different areas, but networking and data centers has become, you know, Jason and I were talking about that yesterday. Nvidia has their own solution. You have Arista that has their own different set of solutions, but Cisco is one of the bigger networking players. Market cap, I didn't even realize the market cap on Cisco was $402 billion. I did not know that, but that is what you got. Cisco right there. 105 up 4%. Trying to go green. I think we got the Robinhood metrics. We'll take a look at that. We'll try to dive deeper into what Cisco says, but they increased their orders by a lot. Let's see these metrics on Robinhood for April, because this is going to be a big one. This is where you should see some bull market momentum coming back. I don't see it out yet on my side. It should be out in a second, and we'll see what they've got. So that's what you have on Cisco. I'll try to get to their press release in a second. DOC, I don't see their earnings. Now it's starting to pump 6%. That's a pretty big move on a $400 billion company. 7%. There you go. This is officially at all-time highs. It was at $44 in 2000. It is well above its all-time highs right here. A lot of these stocks from that dot-com era coming back. 8% now on Cisco. Market likes it. Market likes it so far. Enovix, we got their earnings beat by 13%, negative 14 versus negative 16 cents expected on Enovix. Revenue 7.6 versus 6.95 million. Enovix is down 14%. Enovix makes batteries, for those that don't know. They've been promising some pretty advanced batteries for a few years now, and they've had some deals with Apple and Meta, supposedly, but they've not necessarily come to fruition. They beat on the top and the bottom, stock down 14, Cisco down 9%. Okay, that one continues to make a move. What about AI batteries? Well, AI is definitely going to need a lot more battery technology, but Enovix has not necessarily lived up to that. Doximity, that's down 9.7%. There's the results, or there's the downside right there, trying to get the results. They missed on EPS by 7%. They beat on revenue by 0.34%. EPS is down 31% year over year. Revenue is up 5% year over year. You had a miss and a beat. It was down 11% during the day. It's down 9% after hours. Cisco is up 11%. Networking, everything matters when it comes to these data centers. All right, here you go. Robinhood. Let's see what we got on these April metrics. Let's pull this up right here. Net deposits, $6 billion. Platform deposits, $345 billion. That's up 12% Q over Q. Funded customers, 27.6 million. That's up 110,000. Equity volumes, 249 billion, up 15%. Options, 225 million, up 9%. Crypto, 11.9 billion, down 33%. Prediction markets, 3.2 billion, up 7%. It's good. It's not great. As in, I don't know if it's enough to get the stock to be super excited. Robinhood basically flat after hours. Crypto's down. That was kind of expected. Options and equities meaningfully up month over month, definitely up healthily Q over Q. Event contracts, not bad at 3.2 billion. That's basically $32 million of revenue. But, is it enough to get the stock to move? No. Definitely not in this moment. Cisco up 11%, 114.77 is where it topped out at. LWLG, this is a photonics play. That is down 7%. I don't have their numbers yet. Now, granted, this thing is up 400% in the past couple of months, but it is down. Wow, Cerebras said to pose IPO price at 185 a share. My goodness. The high end was supposed to be 160. That means you're not going to be able to get it until basically 210. And that's if you're lucky, because it's probably going to open at around 200 and then immediately jump to 210, 220. And so if you're going to want to jump in, you're going to have to jump in at that price if the demand continues to persist the way it is. Reminds me of Figma. Supposed to open at 35, ended up opening at 90. All right, that's going to be a hot IPO tomorrow. LWLG, still don't see their numbers. This is one of those photonics plays. Cisco, again, continuing to make a bigger move as that one is up. What brokerage is offering Cerebras IPO? That's a good point, because I don't think Robinhood is offering it, right? So there might be different brokerages that are offering. At least I didn't see the offer for it. LWLG, that's down. Hood flat. Doximity down 9. Cisco up 11. Let's go to Cisco's website and see if we can get some more stuff in terms of what they're talking about when it comes to AI. Let's see if they have something different. Fidelity and Morgan Stanley offering it. Okay, well, Robinhood is not. Again, S&P closed at all-time highs. This was the best day for Ford since 2020 as well. Best day for Ford since 2020. Figma's now $19. Well, Figma doesn't make chips. I think that's the issue. Okay, Cisco, let's pull up their press release right here. So here's what you got for Cisco. Is anyone in this name? Is anyone in it? Double-digit top-line revenue growth, $15.8 billion, 12% year over year. $15.8 billion on Q3. They're guiding for $16.9 billion. Overall guidance is $63 billion. Cisco delivered record quarter revenue in Q3, and we saw very strong broad-based demand for our products, demonstrating the relevance of our technology for connecting and securing AI. Cisco is well positioned as the critical infrastructure for the AI era, building on our technology leadership and customer trust while innovating at the speed and scale that our dynamic world demands. They have your dividend, have some buybacks. Gross margins were at 69%, which was better than expected. Net income also slightly better than expected. They bought back $3 billion of stock. I don't see any specific partnerships or headlines around AI or like hyperscaler deals, but they did increase their earnings guide from for orders from 5 billion to 9 billion, which I think is why the street right here is giving them the 11% move. This is pretty incredible. This is pretty incredible in regards to where the AI momentum is going. Robinhood, again, that's flat. Again, those monthly metrics, not horrible, but not enough, I think, to get the street super excited. Definitely not enough to move the needle to 30, 40% growth. Even with those metrics, we're looking at more like 10 to 15% growth for Q2. Now, we'll see what happens in May. May just started, but May has been crazy. Rock Lab, 124.15, as that one's down a little bit. After hours. Microsoft exploring AI startup deals to prepare for life after OpenAI. Microsoft weighed acquisition of Cursor, backed away over antitrust concerns. I mean, OpenAI becoming separate from Microsoft, which we covered over the past couple of days in terms of that revenue split going away, or at least being capped. Yeah, I think that's also part of the reason why the stock has been down, because maybe the street's like, all right, once OpenAI is done, where's the broad-based thesis for Microsoft outside of Azure? And I would imagine Microsoft needs another, I guess, play when it comes to AI besides cloud, given the software business is not super exciting. We had those news about layoffs today from LinkedIn, which Microsoft owns, that we talked about in the morning. Cisco, 14%. 14%. Kevin Warsh is resigning from UPS. He was on the board of UPS. He is now going to be the Fed chair. You know, it was great getting coffee with him when I worked at UPS, but I also wish him the best on his endeavors becoming the Fed chair. So it makes sense that he is resigning from the board. Cisco, 13.5. 13.5. What did you guys say on the poll? 63% of you say we are entering Euphoria. 63% of you. I mean, we're going to have to see. We are going to have to see. Let me see if I can get any more coverage on Cisco right here. Yes, here we go. We got the coverage. And get his thoughts on what he think is happening in this market. Here we go.
On revenues of 15.84 billion. The quarter was driven by product revenue that came in stronger than expected. Service revenue a little light. Gross margins for Q3 came roughly in line at 66%. The company did increase their AI orders for fiscal 2026. And I think part of that is adding to that big bump. So initially it was $5 billion. They're now saying their AI order will jump to $9 billion. Another big driver for this name too is their guide. They provided a Q4 EPS guide of $1.16 to $1.18. If we can just hold on, because I'm going to get to that quote. And that's much higher than what the street anticipated on Q4 revenue of about 16.7 billion to 16.9 billion, much higher than what the street anticipated. So you had those AI orders, the guide, and then this last little part that came through, the 8K. Cisco announced a restructuring plan, so they could invest in silicon, optics, security, and AI. They haven't really provided details about what this restructuring plan means, but in connection with it, Cisco estimates that they're going to recognize pre-tax charges of up to $1 billion, consisting of severance and other one-time termination benefits, as well as other costs. I wonder if that means job cuts are coming. Cisco said that they're going to be recognizing roughly 400 million of those charges in this current quarter. This is Q4 for them, with the remaining amount recognized next quarter in fiscal 2027. Guys?
Christina, thanks. Christina Parks-Neville, again, Cisco shares up 14% on the back of these results.
I think that probably means layoffs, and we'll see if we get the announcement on layoffs. But yeah, there you go. Cisco, enough of a print to get the market excited right here. Cisco, 13%. I mean, Cisco, Intel, these are the darlings of the dot-com bubble that are finding new life. and boom, they are coming back to life. You guys are saying 4,000 layoffs. I don't see that headline around 4,000 layoffs for Cisco. But if that is the case, then... Oh, no, you're right. Yeah, 4,000. Yeah, Cisco laying off 4,000 people. Okay. Layoffs, they are happening. They are indeed happening. This is pretty incredible, dude. The market likes it. The market likes it. USAR, I don't have the earnings yet on that. That one's basically flat. But I do not have your earnings yet on USAR. I don't see the numbers. No, nothing yet for USAR. Nothing yet. We'll see if we get those results in a bit. This is a rare earth company, but nothing yet so far. All right, let's bring someone else onto the show to help us kind of make sense of what's going on in the macro, how he's feeling about the market, where these stocks are going, and a reaction to some of these names coming back to life. Ladies and gentlemen, Mr. Sam Solid.
Yes, sir. How are you?
I am good. Real quick, can everyone hear him correctly? Just put in the chat if his audio is good. If not, then...
Can you hear me good?
I can hear you. I just want to make sure everyone...
Okay. Because I always have issues.
Yes. Okay, cool. Dude, what's up, man? How are you feeling?
Dude, new all-time highs in the portfolio. Today is a great day. And Cisco earnings are really good. I just reviewed them. It's triple beat. They raised next quarter guidance. They raised full year guidance. This is pretty important for cybersecurity, but also for networking as well. So I wouldn't be surprised if we get some moves off Marvell tomorrow out of sympathy, also Broadcom. But yeah, man, we are doing. How are you?
I am good. I think the concern a lot of people are having right here is PPI was the hottest it's ever been in 4 years. Oil is up above 100. And the bull market is kind of relegated to one part of this market, which is kind of, semiconductors, energy, infrastructure, et cetera. Is that concerning to you? Does that matter that much? Is oil basically transitory when the war ends? I guess, how are you kind of navigating the mixed opinions of how people are thinking of this bull market?
So we can do two things. We can either go macro, where I will put my macro hat on, or we can go micro, where I will put my micro hat on. It's whichever one you want to do, man. Whichever one. I mean, I'm all about the Nebius today, but I can also do the micro as well.
We will definitely talk about Nebius earnings, but let's start with macro, then we'll get into micro. So macro wise, how do you think this is playing out?
Dude, the economy does not equal the stock market. The economy is turning to shit. I mean, we have inflation going up. We have oil not dropping below $100, which is just bad for businesses as when they eventually pass off these costs to consumers. They haven't done it yet, so we haven't felt the full effects. And this is 2021 again, right? This is 2021. And is gold up today?
Gold was not up.
Gold is not up.
Yeah.
This is the only thing that I'm kind of like, wait, why? So we're in reflation. A reflation regime is basically when the only hedge you can have against inflation is buying stocks. We saw this in 2020. We saw this in 2021. Yep. Ultimately, we get the falling hammer right after that, the end of it, but we're just not there yet. And you saw it just from this morning. So
hold on. Before we continue, you are in agreement that the underlying economy is crippling based on the data that you're seeing, but kind of that Druckenmiller quote, you ride the bubble.
Yeah. I mean, I don't think like we're going to crap, but I do think that oil is transitory, right? I do think that oil price can eventually come down. I think the market's very forward looking on that. But if they stay above $100, like that's not good. That's not good for anything. And the market is euphoric right now, super euphoric right now. George Soros, when you see a bubble, dive in. There's no reason to be scared. I'm not scared right now. I'm not. Okay, I'm not gonna lie. I'm just hoping one day I don't wake up and like the Qs are down like 5%. But
I am very happy with at least Nvidia and Rocket Lab's performance in my portfolio, and both of those are scaring me a bit. Nvidia, I think, is more justified than Rocket Lab's run, but I'm also like, well, wait a second. If all the semis start falling, Nvidia is not going to be immune to that just because they're a better company than some of these smaller picks and shovels plays, right? So now, granted, I'm not selling Nvidia here or Rocket Lab, so it's one of those things where you kind of just sit back and you're like, all right, it is what it is, right?
I mean, I've gotten this question so many times, like, should we be scared? The market's going to fall. People try to short the market, whatever. I was on Steve's midday market replay. I forget the name of the show, the midday one that he does. And it was like the day before we got the pullback yesterday, right?
Yeah.
And I was like bullish in that chat. I was like, yeah, just stay long. Like there's already, then of course, we get the pullback yesterday. And what have we seen every single time the market pulls back? The thing gets bought up and it's higher from where it was before the news even started. Yesterday's scare was CPI, and then today's scare is PPI. And I'm pretty sure there are a lot of people who bought puts this morning was like, oh, we're going lower, right? Because PPI is just as bad too. It was worse.
Nope.
And look,
Didn't care.
Just bought it all up. But they sold software. They sold software all day, unfortunately.
So confirming right now, Cisco to cut less than 4,000 jobs, fewer than 5% workers. Let's get your quick thoughts on Cisco, and then I want to move on to software. I think we've had a conversation about this company a year ago. You're familiar with the networking space.
Correct.
Do you think this earnings makes sense? And do you also think it kind of deserves to get this much love from the market, given how much demand is happening for networking?
I haven't checked their valuation, but when you have earnings growth reaccelerate, that is a signal to buy more, right? For a lot of these algos. And I'm looking at the earnings right now, like top line, $15.8 billion grew 12% year over year. Adjusted EPS grew 10% year over year. Most important segment, data center switching orders, that grew 40% year over year. They raised their guide for AI infrastructure orders from $5 billion to $9 billion for the whole year. And the same thing for revenue, from $3 billion to $4 billion. Like, dude, this is freaking bullish. Like this stock will go up no matter what price it is. It'll go up because this is a triple beat, hands down triple beat. And I think Cisco is probably, as we discussed last time, this is probably something that a lot of people don't really see coming. For a company like this to come back, and that's probably the reason why it's getting it. Dan now is actually very bullish Cisco, and he had been for a long time. And dude, that chart basically went vertical since April. So there you go. It's got the tailwind there, and this is basically your Oracle, the way Oracle was last year not when it gapped up like 30%, but where it was the overlooked AI infrastructure play, and now Cisco is. Cisco also has exposure to cybersecurity as well. They have a security segment, not exactly like cybersecurity in terms of software, but they do have, of course, network security as well. So that is contributing to the whole play. I mean, if you look at CrowdStrike, you look at Palo Alto, Fortinet, like those are just doing good. Like software got sold off, CrowdStrike is up 3%. Palo Alto is up 6%. Fortinet continues to move a lot higher after their crazy earnings the other day. Cybersecurity, that's the place to be, but mostly like network cybersecurity and your leaders.
So let's transition that into the software discussion. What do you make of software X cyber? And I guess, how are you thinking of it in the broader context of the macro?
So this is my theory, and it's only a theory because I have no idea why they're continuing to sell software other than money is just rotating out of software and everything else in the market is going to semis. Like, I feel like that's what's really happening because semiconductors are such a large market cap concentration of the entire stock market. It's pushing the market higher, right? So even if software's up 3%, the market could still be down because the market cap concentration has decreased from I think it was 17% like 2 years ago down to like low double digits, high single digits, right? Like it has that much of a dramatic effect. And as you continue to get the earnings growth expansion on semiconductors, they will bid these stocks up. Now, why are they selling it lower, right? So we haven't exactly hit a new low in IGV yet, but people are continuing to become bearish software because the prices are going down and people are coming, it's just trend following, right? Unfortunately, I do think that there are certain software stocks that are going to be in trouble. I don't think ServiceNow is in trouble, but the market is clearly disagreeing with me. But when you talk about software that focuses on small businesses and medium-sized businesses, those guys might be in trouble. Because if you think about generating your own internal application replacement for, let's say, Monday.com, and you have like a 100-person or 50-person team, why do you have to pay Monday.com so much money for 100 licenses, but you could only get away with 20 and just build your AI or LLM to do something for you, and you don't have to worry about compliance, patches, all that stuff, because you only have 100 people working for your company, right? This is where small business software gets in trouble because they're not selling to all the Microsofts in the world. They're not selling to all the Apples in the world. They're selling to the smaller guys, right? Even though their earnings were good and they were up 30%, the market told you after those earnings, I don't care. I'm going to sell you down. They were up 30%. And then they closed that day down, up 6%, right? So, and they basically are trading lower from when they reported their earnings, about to make a new 52-week low. Like, that is the market telling you, we don't want this right now. And
so would you think inevitably there's going to be a rotation and this is the time to buy when people are fearful? Or is this scenario truly different, that you just can't predict what's going to happen with software in the age of AI?
I don't like to pick bottoms. I don't like to pick tops. So I'm going to ride the trend. I agree with the first point that we will see a rotation. I disagree that this is the time to rotate now. I don't believe in that theory, because if you're following trends, which I am by nature a trend follower, I press my bets when I'm riding the trend and I buy dips. This is the time to sell software, and this is time to buy semiconductors. However, I do have exposure to certain software companies in my portfolio, and specifically ServiceNow, Rubrik, and Zeta. But I got to tell you, man, these charts don't look good. I have a stop loss in ServiceNow, and we make a new low, I'm out.
To your point about some of these software names getting bid up, there is a Claude portfolio that we've talked about on this channel.
Oh yeah, I saw that one.
Why don't you tell everybody about it? Yeah.
They sold Zeta and they bought Microsoft.
No, they sold Microsoft and bought Zeta.
Wait, I thought it was the other way around.
No, dude, that's why people were talking about it yesterday. They sold Microsoft, and either AI is stupid or Zeta is like the next software king. So
I must have misread that. Wow. Okay. Nick is probably going to smack me across the face for making that comment. You are correct, sir. They sold. This is
silly, right? This is not something. Yeah, but it's funny because even Claude is like, yeah, I want to go to something that's growing fast in the software space because I think there's too much priced in for Microsoft, for example, which begs the question, how are we thinking of Microsoft as an AI infrastructure play? Here's a question: Microsoft and Meta, what are you doing with those two names right now? And how are you thinking of those two names, I guess?
I sold Meta.
Okay. So sold Meta, not in Microsoft. So basically there are no touches for you.
I don't like, I'm bullish Microsoft long-term. Like, I think this is, if we're still in a bull market, I think this is just small. What's Microsoft at today? Is it like in the low 400s now? Okay, yeah. 405. Yeah, I think these prices are pretty attractive for Microsoft long term. I thought when it was down to like 330 in March, I thought those were stupid prices. Like, come on. Like, are you really selling Microsoft all the way down to the pre-AI levels? Like, come on, that's ridiculous. I do think that the risk reward for Zeta is much higher than Microsoft, in my opinion, but there's also more risk given the market dynamics today. Like, they're not going to sell Microsoft 10% in like one day when it's not earnings. They'll do that with Zeta.
Does it feel weird to you that Microsoft is making tens of billions of dollars of net income a quarter?
Yeah.
And you have these random $500 million companies going up 50% in a day because they're a picks and shovels play. Like, does that make sense? Or is that, and I don't think there's a right or wrong answer, but is that just a trend and you either ride it or you don't?
Brother, it makes no sense. It's stupid. I think it's completely dumb how we're sitting at crazy all-time highs. The market's going parabolic, but you're not including the largest software giant in the entire world that is in every single ecosystem, that has the second largest hyperscaler in the entire world that's growing nearly 40% year over year. It's stupid. I think it's totally dumb, but I'm here. I want to make money. I'm not going to buy falling knives. Like, I don't want to. And I've done that. I learned from my mistakes, right? I used to buy falling knives. I used to buy falling knives all the time, thinking that this is the pivot, this is the bottom. And I've gotten lucky. I've gotten very lucky with Nubank. I've gotten very lucky with many names. I got very lucky with Snowflake. But I'm not in the game of luck anymore. I'm in the game of probabilities and trend following. That has done very well for me this year. And I will continue to do that until the music stops playing.
Picks and shovels plays on this AI build out. What are you thinking of those? Photonics? Well, let's actually start off. Let's take it one by one. Memory. Are you a buyer of the thesis that Micron probably should be re-rated to 20 times earnings versus 7 times? And would you be a buyer of the stock even if we get a dip 10, 15% from here?
Yeah, I would buy the stock. I don't have it. And for me personally, I look for small and mid cap plays. And those are the ones that I usually buy. But if my name were, I don't know, Stephen Fiorio, like, I don't know, I'd probably buy the dip on Micron yesterday. Like, I'm just kidding around. But yeah, no, I mean, he obviously bought the dip and he's probably very happy. I mean, there are people who thought they were late on Nebius buying at $68, like freaking Nate, right? And I still remember when I was like, wow, this guy's really going all in here. Like, he must have some say. And look, he thought he was late. And then there are people who bought it $100. They thought they were late. There are people bought 100. They thought they were late. To be honest, buying 120 is pretty risky at the time. But like,
dude, when it got to 150, there was a significant amount of people in the chat that were at least trimming, and a heavy amount of people that were writing covered calls on my remaining shares, because I sold half in the hundreds. I didn't write covered calls and I just let them ride. But I mean, if I had all my full position at 150, I probably would have wrote covered calls. So the fact that all of those have been wrecked, which is a good transition to Nebius, do you think this stock deserved to get the pump that it got today? And do you think it's sustainable at these levels at this point as basically the best neo cloud out there?
I think it deserved to get its pump based on what we saw in the earnings today. We can go over my thoughts on the earnings if you want, but I think it deserved its pump. I do think the dump on IREN was pretty dumb, in my opinion. I think the market is focusing a little too much on the dilution factor for IREN. I don't think it's a surprise that they're diluting shareholders. Like, guys, this is a high capex business, right? If they're going to be printing double-digit ARR, what do you think they're going to get the money from? You think that they're going to like be able to get all this shit for free? No, they're going to have to raise funds, right? And yeah, the $6 billion fund, that they did, which is the right to dilute, not that they are diluting at the money. The 2.6 convertible senior notes that they offered, yes, that is dilution that's happening today. Guys, like, this is a high capex business. Today, the Nebius call, they raised their guidance from $18 billion of capex in 2026 to $20 to $23 billion. I was like, whoa, I didn't see that coming. I was like, dude, this stock might turn red because of that. It didn't. They bought it all up, right? I feel like that's what should have happened for IREN, but it just didn't, right? Like, I got out of IREN at $45, right? And, I'm bullish IREN, but I just don't want to own it. Like, it's just as simple as that. I already have exposure to this entire sector. And when I saw the thing go to 7, I was like, these people got bearish so at the worst time possible. Like, there's an overwhelming amount of bearishness on IREN right now that, what happens when people get too bearish something, especially when it's in a winning theme. It'll turn up at some point, but I guess that day just was not then. When you look at Nebius, dude, there were a lot of stuff in there that I was surprised to see. I was like, whoa.
Real quick before you continue, USAR, they beat on EPS by 50%. They beat on revenue by 57%. That stock is up 5% after hours. They also issued a PIPE, which I believe is a offering. No, they closed on one of their pipes from Jan 2026, 1.5 billion.
Sorry.
So, what happened?
You said when they issued a pipe.
Oh, dude, you're.
I don't know. Come on, I have to.
Goodness,
all right, I apologize. I'm 30 years old, but I'm still living like a teenager.
Anyway, the stock is up 5% after hours. Okay, Nebius. So they're increasing capex. Revenue projection 7 to 9 billion on deck. Did you think they continue to differentiate themselves as not just the neo cloud, but a full play on inference in general?
Yeah, man. Like, there's a reason why I stayed in Nebius versus IREN. Now, I know people love to be like, oh, my name is IREN, I'm better than you, and Nebius, I'm better than you, I have a longer whatever thing, right? It's like, guys, we're here to make money. We're not here to say I'm better than you in anything. This isn't a race to see who has the most expensive stock as far as absolute price goes. This isn't a race for that. This is a race to make money in the stock market. You are literally trying to beat the SP 500 every year. That's all you're trying to do. Who the hell cares if the other stock runs more? This whole sector is bullish. This whole sector is bullish because they are the ones who are building the massively induced capex, which Bank of America did increase their guide for that. We could talk a little bit about that one too.
Yeah. Okay, so getting a bit deeper into these picks and shovels plays, are there any on top of your mind that are a little bit more interesting to you? Maybe memory, you said you're not that interested right now if it has a bigger dip, but any more smaller mid caps, that's like, yeah, that's a play that is a bottleneck, and that bottleneck will have more demand.
So I have, you already know I'm an analyst with Stock Talk now. It's amazing because there's so much to learn in there, and I'm continuing to learn every single day. So I make my portfolio public on there. I also do it on my Twitter as well. And I've entered 1, 2, 3, like 3 or 4 positions in like the last couple of weeks. And I revealed one of them the other day. It's FPS. Actually, Stock Talk was in this one at a much lower price. But I size this one way bigger in mine because I have a lot more conviction. Well, not a lot more, but I need more exposure to energy when it comes to the AI build out. So I have this one, and I have another position in the energy sector, but this one closed at all-time high. They have earnings actually tomorrow morning, so that's gonna be an interesting one. They only had one earnings since they've been public, so this is gonna be interesting to see how they actually come through in this one. But I'm in the markets bidding.
What's the thesis on Forgent? Yeah.
What?
What's the thesis on FPS?
So what Forgent does is you have utility companies that provide power to clients and also data centers. You know, your CEGs, your CCJs. Also, you have all these utility companies. What Forgent does differently is that they actually build the power plant literally on site next to the data center. So they're providing this power directly to the data centers at scale. Right. So they have lots of partners out there that continue to grow their business. And the thing is that the biggest difference is that this is a $10, $12 billion company. I think it's like $13 billion now. And they're growing at 200% year over year. And they're trading like about 8 times price to sales. So
which is why you're ignoring the PE of like 1400, basically. That doesn't matter.
You can't really pay attention to that stuff, especially when it's so early in the game. It is a fairly risky play, but I concentrated very heavily in it because I do want strong exposure in this sector. I believe that power is going to be the next bottleneck in the market. We've had GPUs as a bottleneck. We've had networking as a bottleneck. We've had CPUs as a bottleneck, memory. I think the next one's going to be energy. I continue to pound the table on that one. And I have another holding on it, which didn't do too well, but neither did all the utility names. They didn't do well either in the market today. But I expect those to come back. It's something where I look for exposure in it. I do my research to find a bunch of names that I'm interested in. Like I was interested in CGEH, Capstone Energy. That's an OTC stock. So I just kind of avoided that one. I'm not sure if that one's actually up or not. I was interested in FLNC. Very glad I didn't get into that one because that one dumped the other day pretty hard. No, I didn't get into BE or Bloom Energy because it was already discovered. Like it was already out there, right? When I say discovered, I mean like it's already made a parabolic move. And a lot of that's being priced in. I would rather get something that's based out before it makes the move versus like just jumping on the trend in size. Like I've done that before with certain companies where I'm riding the trend, but I never size it this big if I'm trying to get into something like that. But there's a lot of other names, and some people ask me about VST as well, Vistra. So the reason why I'm not interested in Vistra is because one, that's like a $50 billion plus market cap, but also they are a utility company that has mostly catered to consumers for the longest time, but now they're signing contracts with data centers and hyperscalers, which makes them more attractive because they'll be able to sell this at wholesale. The problem is that they are already a $50 billion plus company, right? So can I make a double on that? I don't think so. Like it'll take a lot to make a double on that one. I mean, it could happen, but I have a higher probability of making a double or a triple or a 5-bagger or whatever on FPS, a $12 billion company versus a $50 billion company. So that's why I kind of try to focus on like the smaller mid-cap kind of plays.
Yeah, and I don't think that's just you. I think a lot of people have started to discover the large caps, if it's not in the sector that matters, don't matter, right? Like large cap companies like a Shopify, $100+ billion market cap. Forget that it's in software. It's like there's an agentic commerce angle to it, but the market doesn't care. So smaller names obviously have a lot more of the alpha, and that's why they've been getting a lot more love. Are you afraid at all that if there is any day over the coming months where we wake up and, for example, Nvidia says their LPU architecture via their collaboration and their acquisition with Grok is increasing their efficiency on their chips, which is decreasing the necessity for high bandwidth memory. And the bottleneck on memory becomes questioned, which means the bottleneck on a lot of these different things gets questioned, and that causes a cascading drawdown. Are you worried about that, or are you more on the side of, nope, this is a generational build out and that will be a hiccup, but it will not ruin the broader thesis?
I mean, if you follow the analyst estimates for the amount of Capex spending that they're guiding for, like Goldman Sachs, or I think it's Blackstone or Goldman Sachs, I forget. I'm pretty sure it was Blackstone, not Blackstone, BlackRock. They're projecting that we're going to accelerate Capex into 2028. And then Bank of America guided higher for their Capex in 2030 to like $1.2 trillion. Like that's obscene. And that's just for that year. That's obscene, right? Yeah. So if these sell side analysts who pay millions and millions and millions of dollars for research, even billions of dollars for research, are raising their guidance for Capex, what makes me think that any Joe Schmo myself could figure that out? I can't, right? So am I scared that one day it's going to happen? I think it's going to inevitably happen. I don't know when it's going to happen. So why would I prepare myself for something when I don't know it's going to happen, when it's like blatantly clear that it's not happening right now to me, as far as price action goes, as far as research from sell side analysts goes and everything. Like I'd rather not be in the game of predicting that 10% time where the market goes down and be in the game of riding the trend when 90% of the time the market goes up.
A lot of people have this question around FOMO. How are you personally dealing with it? How are you thinking of investing versus trading in the portfolio? Because I think there's ways to like, navigate the trend without having to lock yourself into like, yes, I love this company, it's going to be my next biggest holding for the next 10 years. And, you know, if a name goes parabolic and you're not in it, I mean, you're not in Nvidia. Nvidia's done well, but you're in a bunch of other names. How do you navigate saying, I'm okay with not being in Nvidia or an AMD because I have these other names that I'm more excited about?
Well, I mean, you know, Nvidia is way less risk than a lot of the companies that I'm in. From the standpoint that, look, if the market goes down, Nvidia is not going to drop 70%. Well, I mean, no, it might drop 70%, but like some of these companies that I'm in, like they're going to go bankrupt if Nvidia drops 70%. Like they're going to zero, but I will be long gone and out when that happens. Cause I have a,
but how do you know if you would be out before the bad news?
There is technical analysis and thesis breaking, right? So if you are trading above the 90 EMA, that is a very bullish trend. You're trading above the 21 EMA on the daily chart, that's a bullish trend. You're trading above the 50 EMA, that's usually like my line in the sand on the daily chart. But as long as like structure is still there, then I would hold it. Like if I zoom out and look at the weekly chart and it's still trading above those moving averages, then I'll continue to hold as long as the thesis doesn't change, right? Like a lot of what I'm saying, it sounds like stock talk, right? It sounds like what he's saying, but dude, this works. Okay. This strategy works, and you don't need to copy his plays to get it right. You just need to instill this in your strategy of investing and trading. Okay.
Yeah, I think Jason agrees with a variety of those.
Yeah.
Well, I mean, there's a lot.
Jason has stop losses too. You know, 100%. if you ask a lot of people, they have stop losses. You probably have stop losses too, but your stop loss might not be on the chart. It might be on a fundamental basis.
Right.
But I put more weighting on both of them, right? So I used to be like all fundamentals, and before that I used to be like all technicals, right? But now I'm like 50-50, right? I look for fundamentals to find what I want to invest in, and I look for technicals for my entry and my exit, right? So there's certain stuff where like I will hold it to oblivion, right? Amazon, like I said before, like I think I'm going to sell Amazon, you know, or not sell. I think I'm going to trim Amazon like 10% when it gets to like $300. Well, I'm telling you, Amazon is close to $300, and I'm not sure if I want to do that anymore, right? It's like one thing to say you're going to do it, it's another thing to actually do it. I'm not really sure what I'm going to do with Amazon when it gets to $300, but I'm pretty confident that I'm going to have a larger holding by the time it gets to $300, and I think that's going to be on semiconductor. But when we talk about my portfolio, I have like 20 positions in my portfolio, and I have options positions in here too. And I have no problem adding to positions at certain spots to follow trend, to follow momentum. So there's certain positions which are core positions, right? My Amazon, on semiconductor, Amcor, Nebius, like these are core positions that I likely will not sell. But I do have the defense of not selling these for a while, even if we get a pullback, because my cost basis is so low, right? So my cost basis of Nebius is like $28. And I have averaged up in it. But the thing is that I've been buying it on the way down from 40 all the way down to 20. So I was able to get that like nice big buys in the low 20s to be able to get a low cost basis. But anyways, when Nebius pulled back from like $150 down to $68 after Iran put up their earnings that day and Iran fell below $30 and Nebius fell below $70, I was like, I should be buying, but I already opened the position at a certain size and got it to my liking. There's probably other things to add to, which I did do at the time, right? So because of the fact that I don't add to it, I just let the position grow. I let it build into its size, right? And I'm not going to feel FOMO and start like sizing things up at like $100 because I think it's going to go higher, because then now I screw up my cost basis, but also we're talking about tax lots, selling that, all that crazy stuff, right? So I'm not really in the game of trading around core positions. But when it comes to short and medium term positions, I've had those, right? So I was in, what was the stock that I got out of? I can't forget the name of the stock. I got out of it recently because it just was not working out for me. I didn't like the earnings report, whatever. Like those certain positions I open where like I know this is a short-term position, or I know this is a medium-term position. Like I open a medium-term position in ServiceNow. I have a stop loss for it, $81, right? ServiceNow goes below $81, I'm out. I don't care if that stock goes back up. Maybe I'll get back another time, but like I have certain stop losses that focus more on technicals when we're talking about short to medium term trades. But with like long-term core positions, the stop loss is usually a thesis basis stop loss, right? Like things have, if Nebius came in here and they're just like, Microsoft closed their contract with us and Meta closed their contract with us, we're losing business, whatever, or we're deciding that we're going to actually move out of the data center realm and we're going to move into shoes. So we're actually buying Allbirds apparel business from them. We're going to like, I'm out of that stock. It's probably gonna be down 30%, but that's when I'm out, right? Like that's what I focus on more in the thesis and fundamental thesis breaking for core positions. For short to medium term, I focus more on the technicals for that one when it comes to the entries and exits.
The reason Ford is up, guys, Morgan Stanley analyst said today, we believe there is a fairly high likelihood that Ford signs an energy storage system supply agreement with large commercial customers and potentially hyperscalers over the next few months.
What?
I mean, this is the nature of the market that we are in. Ford is going to become a contributor to the AI build out. And the bullish side of me says we are so compute constrained. We need every company on the planet that has the facilities, the infrastructure, et cetera, to supply and help build out compute. The bearish side of me says, okay, this is some bullshit. And I don't know which side I land on, but I lean a little bit more bullish than bearish, just because if the revenue for these companies, which we've seen in big tech earnings last month, is coming from compute, and they need players to help them with compute, and maybe Ford is one of those players that can help them. Ford catches a bid.
Listen, when's AK Media become a hyperscaler?
I mean, at this point, why am I not, providing compute services in some capacity?
You're like running a GPU cluster behind your desk real quick. Hold on, guys. I got to answer a call. One of my clients is calling me. I got to fail over here.
When you hear something like that, is it laughable to you, or is it like, no, this is what we have to kind of consider in a more meaningful way?
Well, there is a lot of government backing for Ford. So It's possible that someone told them to do that. But I ride the wave, man. Ride the wave. Like I don't see any reason to be bearish. The market is trading above all the moving averages. Even after 2.5 pullback on the Qs yesterday, it didn't even get anywhere near its 9 EMA. Like, why would you absolutely get bearish at the bottom?
Rate hikes. Do you think it's happening? And if it does happen, do you think it even matters?
I think we're going to know in Jackson Hole. That's August. I think it's like, I forget which day in August, but August is when the FOMC committee meets for 3 days. And then they decide on their plan for attacking the Fed balance sheet, as well as their rates, whether it's hike or cuts for basically the following year, right? The 12 months that follow that. Yeah. Until then, I think there's going to be a little bit of wait and see what happens, especially with Warsh coming in. I know there's like a lot of talk. Warsh is bullish, crypto, all that stuff. It's like, guys, these are just the crypto guys telling you this stuff just to make crypto bullish. Like, no one knows what Warsh is going to do. Like, who knows? How do you know what he's going to? No one knows what he's going to do. He could say we don't even know if he's the kind of person that says he's going to do something, he doesn't do it. Or we don't even know if he's the kind of person that says he's going to do something and actually does do it. We know that Jerome Powell will not do anything the market tells him not to do, and he will pivot. We don't know if Warsh is going to do that. Like if the S&P 500 is down 20% because of a pandemic, will Warsh give us ZERP? We don't know. We had the Powell pivot in 2018. I think the market kind of sniffed that was going to happen in COVID. We don't know what's going to happen with Warsh. We just know that Warsh is someone who is very strong on having displacement from the Fed to the government.
Do you think Capex slows over the next fiscal year or no?
No, I think it slows. It starts decelerating in 2028.
Okay. So if it does, do you think that has an impact on a lot of these plays that people are excited about? Or if the rate of growth slows down, the actual dollars are still in the hundreds of billions. So it doesn't really matter if it's not growing rapidly.
I think the market's going to sniff that out before it happens. I don't think that that's going to be like, I don't think that I'm not worried about that. I don't think Nvidia is going to come out there in earnings as a $5.5 trillion company, the second largest asset in the entire world, larger than silver. I don't think they're going to come out there on Wednesday and be like, guys, they cut our funding, we're reducing it. No, Jensen got picked up in Alaska. Trump pulled over in his jet and was like, get in, Jensen. We going to China. We're going to order some Panda Express, the orange chicken and everything. Let's go, Jensen. Let's go. I don't think he's going to do that with Trump and basically stick his middle finger up to Trump and say like, look, you guys are all done next Wednesday. No, he is going to keep the party rolling.
I would agree with you. I don't know if it's Panda Express, but I would agree with you that
Panda Express, baby,
might be happening. Panda Express is legit for those.
Oh, I might get some after today.
Fintech, do you think it's coming back?
Oh, you don't need to pay me for. You don't need to pay out $4.99 for that. I'll tell you right now.
I appreciate this for the person.
Yeah, of course. I mean, I think it's just friggin' awesome that people are just they're tipping because they want a question in there. Guys, I'm on Twitter all the time. If you got any questions, just like tag me or something, or even check out the Stock Talk Insiders on there. But I even answer questions for people who just like DM me randomly, right? Like obviously time willing, I need to get back to you maybe in a couple of days if I'm extremely busy. But I don't think so. This is the issue with SoFi. So I'll get into the issue with FinTech and then I'll get into the issue with SoFi. So the problem with FinTech is that this is a FinTech problem. SoFi is close to making new 52-week lows. Shift 4 is close to making, I think it just made, no, it didn't make a 52-week low today. It did recently though. Affirm is not that bad of a chart actually. Shopify is kind of FinTech. Back in the 90s, right? All of these FinTech companies are getting dumped. Where's Delo at? Delo is
Delo's been stuck for like a year at this point.
Yeah, no, I don't hold Delo anymore. I think I sold it when it had its previous pump last December. But Mercado Libre, this is like a headbanger right here. I don't know. It's not that I don't know. It's just like, look, the market doesn't like this right now, right? This is anything that's with FinTech is getting sold. Anything that doesn't have to do with chips is getting sold. That's just the nature right now. Now it's SoFi. I think that SoFi will come back when FinTech comes back. The problem is that Anthony Noto could buy $250,000 of stock 2 days in a row, or $15 million of stock, whatever it is. The market just doesn't care. Yeah. I don't know how you try to paint. I don't know why people paint that as bullish because like the market doesn't care, right? Who thought TTD bottom when Jeff Green, the CEO, bought $150 million worth of stock? I thought it bottomed. Here we are today, 52-week lows. The market doesn't care about these things. It doesn't care about ad tech. It doesn't care about app loving. It doesn't care about FinTech. And don't shoot the messenger. I'm just telling you what the market's telling me right now. And it says, don't buy these stocks. So you got patience, go for it. But, my strategy is not to buy falling knives. And it's unfortunate. SoFi is an amazing company, but the market is basically saying today, like, you're not a tech company. And every quarter you're proving to us more and more and more, you are not a tech company. So we're going to sell you and price you like a bank. That's the unfortunate part. And I think it's starting to look at these other FinTech companies as bank or payment intermediaries too. Yeah. Like, dude, even Toast, holy cow. Like, what's the deal with Toast? They are one of the largest payment systems in the entire world, and the biggest competitor is Clover, and Clover is owned by Fiserv. Why?
Well, let's try to think of this from first principles. Is there a logical reason outside of this thing that you and I have been talking about and everyone, which is that the market just hates anything other than semis, for these names to be down? Like, is there an AI-driven reason that hurts their bottom line that we're just not thinking clearly about? Or,
well, I mean, you have $600+ billion this year. You have $800+ billion next year. You have almost $1 trillion by 2030 going into all of these chip stocks that are working. So people are following the money, and that includes the market.
but outside of that, which is obvious, do you personally feel, because I can't fundamentally think of a reason why, unless you're talking about valuation compression, but usually that comes from lack of growth. All these companies are still growing. SoFi, Affirm, Toast. Is there kind of like that Citrini article, right? Which is like, you're not going to need payment providers because you're going to have agents inside of the large corporations that automatically process the agents for you, or the payments for you. I don't think that's happening.
No,
which is why I think people think these are opportunities, because these are irrational drawdowns.
Yeah.
But to your point, it's not the trend, which is why they're rational.
Yeah, I mean, the market goes through its situations where it's like falling into the FUD trap, right? Fear, uncertainty, doubt. It happens all the time. This just unfortunately is much more prolonged than what we're actually used to. Okay, let's go back to DeepSeek. I think DeepSeek was an excuse for big money to get out before the big fall for the tariff tantrum, right? But on a fundamental perspective, did that change anything? No, it changed absolutely nothing for DeepSeek, yep. But the market was stuck in the FUD scenario. I do think that you'll be out of the FUD scenario when it comes to software and fintech or whatever's not working. But what's your time frame? What are your risk parameters? What kind of themes do you want to invest in? All that stuff. It's kind of, it's objective. It's subjective, right? It depends on what you want to cater toward, your risk parameters and everything. Look, if you want to invest in something and just forget about it for 20 years, you can probably buy Microsoft where it is today. You could probably buy ServiceNow. But if you are in the now, right now, where you want to outperform the S&P 500 today, you're like Jon Snow standing in front of an army of dead soldiers, whatever they are. The walkers. No, the walkers was, what do they call them? I forgot what they call them in Game of Thrones. Anyways, you get what I'm saying.
I actually don't, because I've never watched that show.
Oh my goodness. All right. We need to change that. White Walkers. Yes. Thank you. Greatest vids. White Walkers. Actually, no, in that scene, he was not fighting the White Walkers. He was fighting other people. But anyways, yeah.
Have you seen Dawson's Creek?
I saw it a while ago when I was a kid. Yeah. Can't believe that guy died so young. Yeah, I should probably rewatch that. There's a lot of shows that need to watch. But I don't know, man. I think that the tape is telling you what not to do and what to do. People are underperforming, and look what you own, right? And then look how they've been performing. So, I think that if you're a long-term investor, you're literally investing for decades, who the hell cares? Whether something's down 5 or 10%, just buy.
Okay, can we talk about that as well? Because let's use Rocket Lab, perfect example. Let's say you bought it at $20 and you refuse to sell because to your point, right? Cost basis is king, and you love having that. But let's say you're a majority Rocket Lab and you play around with some other money, but your real money's in Rocket Lab. And this year this is a bad example because now you're outperforming. But
massively outperforming.
Yeah, SoFi, you bought it at 4. And it's done well over the past couple of years at 16. It's up more than triple. But now this year you're underperforming. Would you personally sell that cost basis of 4 if that's where the majority of your money is, if you believe in the company to rotate, as you're saying, into the trend? Or do you have to be okay with 2026? I'm not beating the S&P, but by 2029, when I look back on the past 4 years, I will massively be beating the S&P because I think SoFi will continue to go higher and be a multi-bagger. How do you think of that?
So if you bought SoFi at $4 in 2023, and it's trading at $15 today, that means you quadrupled your money in a matter of 3 years. And I believe you're beating the S&P 500. So you have one bad year, right? That doesn't mean you should sell if you have such a low cost basis. If I bought SoFi at $4, I would still be holding SoFi if I really did believe in the story. Now,
right.
I can't tell people what to do, but I don't really believe in the SoFi story. Like, I don't think it justifies them having a $30 price target today, right? And that could change. That could change if they become more of a tech shop. And guys, don't shoot me. Like, I'm just saying, what I think. Like, SoFi could be $30 tomorrow for all I know. I have no idea. But let's take, for example, a theme that I invested in at a low cost basis. Okay, Marvell Technology, $90, and it's $170 something today. If Marvell pulls back 30%. And the thesis hasn't changed, I'm probably not going to sell it, right? But if we hear this story that Capex is slowing down, I'm going to reconsider, because that means the thesis is changing. That means they're not getting as much investment in this, and that could be a problem, especially if the charts break down, right? If we hear that with Amazon, I'm probably not going to sell because my cost basis is low, but that's also a mega cap. So I do consider that a lot safer than like something like Marvell, where it could be cut in half if this dramatic event does happen.
Right.
Now, I've invested in Snowflake before, right? I got super lucky buying aggressively at the bottom. And I sat in drawdown for a long time with Snowflake. And this was before I changed my strategy. But I'm glad I got out of Snowflake at a higher price, even though I continued to see it proceed higher, because I rotated the money into other stuff that was working. So now if I own SoFi at $4 and I still believed in Anthony Noto and I still believed in the bull case for SoFi, why would you sell now? Like, I just leave it, right? Say that Rocket Lab, if you truly believe in the story of Rocket Lab, you still have Peter Beck as your CEO. You still have the space theme doing great. I think the space theme is just getting started, to be honest. I don't know about the price, but I think this entire theme is just getting started, because I think it's all heading there. Why sell now? I don't know. I don't see a reason to sell something that's working very well, because next thing you know, you sold Nebius at $120 because it went too high.
Yeah, I also think it's the nature of being in high beta growth. Some years, if that's the majority of your portfolio and you're not actively managing it, will be underperforming years if you're in the wrong theme. And Rocket Lab was like that literally 2 days ago before it gapped up. But the fact that it did gap up is also indicative of the fact that that's why you're in those high beta themes in the first place. Do you have space exposure, and is Rocket Lab or any of these Planet Lab type of names exciting to you?
I've traded Rocket Lab before, and the funny thing is that I should have never sold it as a trade, and I would have been making bank right now, but I did, unfortunately. I started a small position in IRDM a while ago, and I saw the thesis on it too. I looked into it. I was like, oh, this is actually a really good play. The valuation seems pretty compelling. I opened a small position in it, and like, lo and behold, the thing basically like went parabolic. So I have exposure to it. I'm not planning on getting additional exposure into space, mostly because I'm not too gung ho about that whole thesis. I think we're a long ways from getting data centers in outer space, but I do think sending more payloads into low Earth orbit, the fact that we have Jared Isaacman as the commissioner, whatever they're called, of NASA, the fact that we're getting all this talk about it, like, I kind of think that this has a lot of room to run. I'm not saying buy Rocket Lab here at $125. I'm just saying that if you already own it and you owned it since $4, $5, $20, $30, $50, like, why are you selling? Like, do you know this is the top? Because people thought that was the top for Nebius when it went back to $120, and they are regretting it now, or some people are regretting. I'm sure some people are happy they made money, but the thesis hasn't broken. So why sell it?
Any thoughts on Nokia, which again, yes, I did buy today, but to this entire point of the conversation, bought it as a trade, like the option flow, like the technicals. I've been talking about it over the past couple of days. Not every single stock that I buy or Sam buys or Jason buys is going to be an investment. And in this type of a market, people are going to take some of their shots. They're going to work. They're not going to work. And some will work, some will not work. But this is one of the shots I took today at 1398. Are you excited about this one at all? Do you think there's kind of like an Anduril 6G infrastructure thesis, Nvidia's invested, or nothing there?
I actually took exposure into telecom as well. I didn't buy Nokia, but I bought another telecom play, and very compelling valuation. I've done a bit of research on this the last couple of weekends. my time is pretty scarce, so I don't have time to like sit down and do like 8 hours of research a day. But this valuation seemed pretty compelling. Bought a small position in it, and I do believe that I think telecom is going to be the next big thing. I think that the A's. Well, because when you're talking about internet connectivity around the entire world, and we're talking about isolated regions where people do need to use those inference models, and they don't have the actual Ethernet cables laid out everywhere, the actual fiber optic cables laid out everywhere, like how are you going to get internet speeds, right? And we're talking about how these models are using inference queries so quickly and how demanding they're becoming. You need faster speeds, right? So when you think about like these smaller players in this region and the accelerated build out of the infrastructure, they're going to start tapping the smaller players, which is exactly what you saw with your Nebiuses and your Irons and everything, where like these were one single digit stock. Well, not Nebius was like $19, but like Iron was like a single digit stock. So was Cypher and all that. They're going to start tapping these guys and their growth is going to start accelerating based on those bigger contracts that they do open up with these larger clients, which may be small now, but they'll start being later. But Nokia has a much better story. It's hard for me to value Nokia. And to be honest, I just not really gung-ho about it because that's literally all I read on Twitter.
Sorry, guys. Was not on Do Not Disturb right there. Yeah, I think that's a fair point. I also think that's why you're getting a lot of hype when it comes to telecommunications around SpaceX. Do you feel the SpaceX IPO is going to suck a lot of liquidity out of the market, or how do you think about it? Are you a buyer of SpaceX?
So when you think about it, the banks are backing the shares that are going to be released in the open market. Yes. So people in the stock market are going to be buying SpaceX, and they're probably going to have to sell other stuff. But then these banks are going to turn around, take that money and invest it in something else, right? Like, so as long as there's being liquidity added to the system, I don't see it as like a zero-sum event. I see it as just rotation, right? So maybe when SpaceX comes out, space stocks are going to roar and money's going to rotate like everyday basis that you see. But I'm not sure if like, I don't think that's anything to worry about. I don't see how that's anything to worry about when SpaceX IPO. It's like, I better sell all my stocks the day before the IPO because they're going to suck all the liquidity out of the system. Like, I don't know.
Yeah, I think that's fair. Same thing with Anthropic and OpenAI. I mean, yes, they will take liquidity out of the system, but obviously it's why the market is so excited because you've got some of the biggest companies in the world going public. Last topic for you. So this has been live all day. I don't know if you caught this, but Figure has put on a stream all day. 5,500 packages have been correctly flipped over by a humanoid robot. How do you think of the overall robotics theme that's happening right now?
Dude, first of all, Brett is freaking killing it. Like this is one of the most fascinating companies I've ever seen as far as accelerating robotic growth. You have Tesla with Optimus, but they are not as public as Figure when it comes to rolling out like active progress in their technology, which makes it a bit questionable for Tesla. It's like, well, Figure is doing all this stuff. Like, what are you doing with Optimus, right? We're kind of taking their word for it. Figure is like publicly doing. The unfortunate is that they're private, right? I wanted to invest in this company for a long time. I'm just totally fascinated by this. Like, I still remember that one video that Brett released like last year where it was doing the same thing, but it was so like rigid the way it was moving and its body was staying in one place. Like, look how fluid this robot is working right now.
Yeah. And it's the worst it's ever going to be. Yeah.
I know. And I could probably watch this video for like an hour.
Bro, it's so crazy, right? Because this is a real job in warehouses that it has to, I mean, it will be replaced. It's inevitable.
Yeah. So, but it's like, I hate watching these for so long and becoming so fascinated because then my brain starts to go a little crazy. And it's just like, what if it does something else? You know, like, I mean, it's like literally just code that's telling it what to do. So it's like, what if, I don't know. I don't want to go there.
Well, no, really eventually it's going to kill all of us. Dude, eventually it's going to get smarter. Like, why am I listening to this stupid human? Dude? Like, that will happen.
It has a limited strength too. So it's like, it's not just going to stop. Like, it's going to keep
going. Yeah, because
like,
once the model realizes that it doesn't need to comply with, like, I don't even think it's crazy to say this. And this is, you know, so many movies have been made about this. But once the model realizes it doesn't need to listen to a human because it's smarter than the human, theoretically, You have to have some really good code to make sure that doesn't get triggered.
Well, I mean, now we have code built in code, right? So who knows at this point? And also, we've seen like those movies where it's like the machine's doing good when it's trying to kill all humans, but it's doing good for us, right? It's like, that's kind of scary, man. I mean, Terminator, they make the machines like in a bad connotation. The machines want to take over the world. But then there are those other movies where it's like iRobot, where it was like the machine was doing good for humans by putting us in order against our own will. Right. It's like, that's kind of scary. Did you ever see the movie Tron, the newest one?
No.
Okay, so basically it's like an AI bot, that comes out of the grid,
I saw the one with
right,
Megan
the simulator. Yeah. She was in one? I don't even know she was in one.
She was in a robot movie where she was the maid, and she ended up falling in love with the husband. And the wife gets super pissed off, and like, that's a little bit less realistic, but still it's crazy,
Sounds good. I think you sold me. I might have to watch it. You said Megan Fox falls in love. I'm gonna have to watch that movie now. But I lost my train of thought. I don't know. I forgot.
That was not Transformers. That was a movie on Netflix, guys. It came out like
Oh yeah. So in the newest Tron movie, I don't want to like spoil anyone, but like the robots were doing things because it followed an order to the fullest extent, right? So how do you know, like, where's that limit, and how do you code that, and how do you code it enough that the robot can't disobey your order after you already gave them an order, right? Like, go do this, and it does whatever it takes to finish that mission that it's coded to do, but then you tell it to stop, but then you already told it to do its mission. So like, what if, like that? I don't want to freak myself out, man. I want to see Spy at 8,500 or 10,000 before that happens.
Okay, let's end off on this. And again, Sam's Twitter is right there. You can check him out and follow him. He's obviously a big part of our community. We loved him at the LA meetup. Hopefully we get to see him at a meetup, and becoming a good friend as well. What's your S&P target for the end of this year, if you have one?
Remember last year when I said 7,500?
I remember.
Dude, we're at 74. We're at 74.44 right now. Like, this is crazy.
You were a little early, but we're here. You were not wrong.
But this is crazy. Like, the Citrini article said 8,000.
And he said 8,000 October 2026, right?
We're heading there, which is kind of scary. It's like, hold on, if Citrini was right about that, is it going to be right about the 28% drawdown?
That's scary. What do you make of the? I'm sure you've seen this chart, but the midterm drill. I'll pull up the chart for everybody. I mean, it's happened every single midterm year for the past 80 years. Do you think we get it again? Which basically means right now we're topping in October would be the bottom, or does it just not matter?
I think we're going to follow the same playbook as last year, where we rally into October and then just go into some weird, slow bleeding state until February, where it ends in like March or April, and then we just go higher again. Like we are following the exact playbook from last year, like, except it's happening faster because I think people are catching on to it. But we are following the exact playbook as last year. So I think I think the sell in May and go away is total BS. But whatever I think can change tomorrow if we dump like 10% tomorrow. Right.
Well,
so go ahead.
We're playing the same playbook from last year, but to your point, it's faster. And the drawdown wasn't as bad. Like last year, we fell 30%. So it was kind of expected. Okay, we got a lot of room to make up. This time we fell 8.9%, which is kind of nothing, to be honest, even though it felt like a lot. And now we're just, brushed to all-time highs every other day.
I think the way the market is built today and engineered is that it's impossible to go down. I don't want to say impossible, but there's less probability that we're going to have a sustained downtrend to a certain level and stay there for a while, because there's so much capital being injected into the market, into the system every single day. And I don't think it's happening in this presidency. I really don't. I don't think this president's going to allow it, right? Like, he had a tipping point. It was like 5% down. The S&P 500 was when he started to taco, right? It went down a little bit lower, but like he tacoed, right? Like, dude, the floor is like so freaking high with this guy. So like, who knows? Who knows what's going to happen?
If the 10-year pumps to like 4.6, 4.8, he will taco again. And if the market doesn't drop, if that happens, which the market has not dropped for the past couple of weeks, even though the 10-year has spiked up, which is different from April of last year. To your point, the floor is absolutely much higher.
Yeah.
Potentially, if this narrative continues to stay true.
So I find it fascinating how oil is above $100 and like the market is just flying higher. Like I just find that very odd.
Fascinating or scary?
A little scary. But I mean, I think at this point, I mean, I'm up a decent amount year to date. So even if it falls back, I'll give some back, but then I will take cover at a certain point if we get below the 200-day moving average or we get below the 21 EMA. So I think until then I got some wiggle room to play with, and I've already accepted that, right? Like I'm never going to be able to get out of the top. I'm never actually going to get out. The most amount of cash I've ever had was like 10% during any given period. So,
but I also like what you said in the beginning of the show, which is that if it is oil as the reason for inflation and the war comes to an end, maybe we get some China update over the weekend. China's helping Iran open the Strait of Hormuz. Oil is going down. And I know we've had a lot of false breakdowns, but what if this time is the real breakdown? And then I imagine what happens to the markets if they're like, oh, now we can party.
Oil doesn't have catastrophic 30% drawdowns and stay there. Oil is very different. And it's much more of a trader's market than anything.
Yeah.
However, I do think we're like a headline away from getting a 10% drop in oil, probably a bounce and like a slow bleed down, but like a volatile bleed down to like $80, $70 in oil. But all that is out the window if we make a new high, right? So that new high is like validates the uptrend still. So I'd be scared if oil goes above, well, whatever the high was. I think it was like
120 this year.
Yeah,
like
if it goes higher than 120, I'd be a little worried. And I think the market would probably be worried by that time too. But oil is just lower highs and lower lows lately.
Yeah, a lot of people saying AI Capex is the only thing keeping up the market. I think that's fair, but again, the stock market's not the real economy, right?
Yeah. I wanted to say one thing before I go. So there's the Wolf Summit that's happening August 3rd. Are you going to that?
I don't know yet because I'm traveling in August, so I might be, but I might not be.
Are you doing the London meetup during that time?
I don't know about that either yet. We're still trying to figure stuff
I
out. Generally, I don't know. Like, because I'm seeing family, traveling. August has a couple other events, so I'm not going to probably know till the end of June.
Okay, but you're doing the Dallas event, right?
I don't know about
Houston.
I was on the phone with Stock Talk yesterday. I don't.
Oh, come on. Well, that would be a cool one. I go to that one. I'm going to be at the New York event with the Wolf team. That one, the website is summit.wolf.financial. The tickets are like $750, but you can get it for $250 if you just sign up for a free public account. And I know they're trying to like push people to do that. Huh?
$750?
Yeah, it's $750. But if you sign up for a public account, it's $250. But I would say check that out. It's not like a $3,000 Nvidia event. At the same time, you're not having Jensen Huang there. But it's going to be a pretty cool meetup, and it's in New York, so I'll be at that one. I don't have any like keynotes or anything, but Stock Talk's going to be there. Evan, the whole team are going to be there. A bunch of people in the Wolf crew, and I mean, I don't know. I like those guys, so I'm going to go. And plus, it's New York, man.
No. I was talking to Evan the other day. I was like, I want to. I just legit don't know if I will be in New Jersey.
Yeah, that's all good.
Yeah, I got to figure it out. All right, cool stuff. Sam, thank you for hopping on. Appreciate you being a consistent guest on the show. Sam's Twitter right there in the chat.
Yeah.
And we'll talk to you next week.
One more thing. I still remember that day when I pitched Nebius on here and it was $33 and someone called me a creepy salesman. So I don't like to rub it in people's faces, but in your face. That's it. I'm out.
Like there's someone random in the chat. That moment has been Sam's chip on his shoulder the past year. He's like, I will one day get revenge on the creepy salesman comment.
It's all to prove you wrong.
There you go. All right, Sam. Thank you. Appreciate it.
All right, later, dude. Thank you.
Later. That was Steve. Yeah, that was Steve's burner in that video. All right. I think that's pretty much it for the day, guys. This is just an absolutely crazy market. Absolutely freaking crazy market. And again, I really don't know if I'm going to be at that Wolf event. I mean, they told me about it a month ago, but I don't even know if we're doing the UK meetup in August. So like there's a lot of stuff I have to figure out. So it's hard to commit to anything. My gut tells me no, I'm not going to be there just because of all this shit going on in August, but I will let people know if I'm there. Nokia moving after hours, 1518. Nvidia moving after hours. Rocket Lab red after hours. I mean, this has just been a crazy market. I think wow, Cisco, I haven't even looked at Cisco since we had Sam on. 18% on a $400 billion company. I mean, yeah, they increased the orders, but they didn't really beat on revenue and EPS in the guide that dramatically. They beat, but it wasn't like a 20, 30% beat. It was like a 4 to 5% beat. I guess this market does not care. You put AI, networking, chips, memory, photonics in the same sentence, you show any bit of a beat, and boom, you're green. And you're getting some love right there. Wow. I don't think a lot of retail owns Cisco. They're doing 4,000 layoffs. Yes, we talked about that. But obviously it's a name that's been getting a lot more love right here on earnings. Yeah, I think a lot of people are split, right? A lot of people are split in terms of how to think of what's happening in this market. This is one of the weirder bull runs we've had in a while because so many people are either completely on the sidelines because they just didn't believe in the whole Iran war ending and, heavy cash. That's got to suck. Then there's a lot of people that have winners over the past couple of years that are just not running in this bull market. That's got to suck. And then there's people that have exposure to semis, but might not have massive exposure to semis. And so it's a combination of some people that are over-indexed into the Microns of the world or the AMDs of the world are loving this. And then some people that have some exposure to it, but just not as much exposure as they would like to have for a stock that goes up 80% in a month. It's cool to see the market rally, but it's not the type of rally that it was over the past 3 years where pretty much everything participated. And I think that's the broader issue. And then on top of that, to Sam's point, oil above 100 is weird. PPI, CPI, weird. However, it's not that weird if it becomes backward looking, which maybe it is backward looking, given all the demand that continues to, or given the war will end and oil could come down. But I don't think oil is going to 70 anytime soon either. I mean, the lowest we got to was 84 and then it spiked back up. So, I mean, there's some different stuff to see how this is playing out. Then you also have other people saying, well, the Strait of Hormuz has been closed for so long that there's going to be all these different ramifications that we don't know about yet. And when that stuff happens, that's going to be a slap in the face to this market, which, yeah, no one can predict. So it's hard to say. All right, like I'm not selling Nvidia at 225, even though obviously if things get ugly, Nvidia is going to get hit as well. But I think the question is, if Nvidia gets ugly, then how ugly does the rest of the market get? Or do the inflows from the rest of the smaller, picks and shovels plays go into Nvidia because they're searching for safety? Which I don't think is necessarily that crazy to say. Could happen either. 13Fs are not out yet. We're going to get a lot more of them on Friday, so we don't have the Buffetts and the Bill Ackmans of the world, the Druckenmillers of the world, the Altimeter Capitals reporting yet. We had a couple of them, but not the massive tech ones. And so we'll see on Friday kind of what this ends up playing out. Yeah, we get to see what the big hedge funds are doing on Friday. What about EOSC? EOSC, again, they had a great earnings. They were up 30%, but this is why this market's confusing. If you saw that earnings and bought into it, I mean, you lost everything. And after hours, you really lost everything. Went to 1190. I don't study this company that well, but as Sam mentioned, energy is a bottleneck. And so if you're an energy stock, you at least have the street's attention. Like you really have the street's attention because energy is the biggest issue that we're having right now outside of compute. And so 1190 to 815 completely got faded. It was a short old day. And it's a small cap that theoretically you would think could catch a bid, but like it's not necessarily catching a bid even on good earnings because maybe the money left EOSC today and bought the Micron dip, which Micron ended the day at 803. Oklo enters equity distribution agreement for up to $1 billion at the money offering. Okay, that's probably why it was down 5%. So they're going to be diluting by $1 billion, which the street probably will not like. Let's listen to Bank of America and their thoughts on if we are in a bubble or not.
Alger, and she's here with me once again on set. It's good to have you back. How would you answer that? Don't fight the tape or bubble trouble?
What do you think I'm going to say?
Don't fight the tape.
You got it.
You're not worried at all about possible bubble?
No, it's just too early, Scott. I mean, numbers are going up for all of the AI related stocks. The numbers are still too low. They will be low. I think they'll probably be low for the next 2 to 3 years.
Wow.
And
I mean, if that's the case, bro, if expectations are going to be low for the next 2 to 3 years on Capex, compute constraints, and earnings estimates, we're going higher, folks.
Okay. And I had said, I remember coming on here in 24 and saying Capex is going up in 25, 26, 27, and 28. And we're only in 26. Capex is going up. 27, we know Capex is going up. I believe 28 is also going to go up because we are simply short compute. And the entire supply chain needs to adjust for the compute demand.
So when some say, be careful that this earnings momentum, and the numbers are huge, undeniably so in tech, and be careful about the Capex numbers because they're undeniably huge, but at some point they'll become more cyclical than secular. Now, you're painting a scenario in which this is a years long from here outcome.
That's right.
Which leads you to believe that this is almost a more secular thing because of this transformation that we're going through. If you can define such a period of time of 3 to 4 years as being a secular change in the economy at large and the way companies are spending on AI. It's fair?
Yes, it's definitively secular. And look, that's where the opportunity for us lies, where the market, I'm quite happy that the market actually thinks it's cyclical. Versus secular, because it gives us the opportunity.
The market does. I'm not sure what the market thinks, but some of the skeptics out there.
Right, and what I would argue is that this is such a sea change in the way we actually compute, and the amount of intelligence that's coming out of the computation, that it is a secular change. It is not a cyclical change. So yeah, I'm just not that anxious about that narrative.
What about the narrative? Sort of like it's AI and everything else. Are you fine with that? The way that the makeup of the market looks right now?
Well, look, I think that we're in a really interesting period of time because we used to be a consumer-led economy. Mm-hmm. And I mean, the consumer is a very important aspect of our economy.
Well, it's 2/3 of it.
That's right. But what we're seeing today is actually a little bit of a baton pass into a more industrial-based economy, and that industrial-based economy is actually driven by AI. And so you are seeing the shift in our economics of the US, and therefore you're seeing it in the market, where the consumer is no longer what's dictating what the market's going to do. It's actually this very, very separate AI trade, because it too has its own cadence.
Do any of these moves in any of these stocks give you pause at all? You sat down and you said, Nebius, and you showed me your phone with the stock move on it. And it's like remarkable. As I said the other day, what used to be special now feels routine, that you see these kinds of moves every single day. You can show this. I'm also, I guess, inferring to like a Micron and things that have just gone parabolic. I get the excitement, but is some of this a little too much or not?
Well, so here is what I think. It looks like it's too much when you look at the stocks. But you have to understand, we have to deconvolve the numbers and how much the numbers have come up versus how much the multiple has come up. So for Nebius, the reason that it's up as much as it is today is that they raised how much power that they'll have access to, which means that's directly correlated to the numbers in 27 and 28 and beyond. And so when you're seeing earnings revisions that are on par with the stock moves, then the multiple is staying the same, if not shrinking. So I think the market, and we have to deconvolve the interaction between the numbers and the multiple.
Right. Price action versus what the price is that you're willing to pay for these.
Right.
Stocks.
And there's a big swath of companies that the numbers have moved up faster than the stocks have moved up. So, I mean, Nvidia is a classic one, right? The numbers have moved up and they'll continue to move up. And so it has never gotten expensive. And in part, the multiple has stayed kind of flat.
Look, it's a fair point. It's not a hard argument to understand. I mean, this is kind of the picture that I've continued to show, which is the market capitalization is continuing to go up for semiconductors as a sector of the S&P, but the earnings growth and more importantly, the forward earnings estimate is also continuing to go up. And, you know, a lot of people that are screaming about cyclicality, Nvidia was seen as a cyclical name back in 2023 as well, that they couldn't possibly keep putting up this much growth when it comes to GPUs, but they did because we were, as she said, compute constrained, and we need a lot more chips to continue making that happen. Elon yesterday, you know, saying that all these software companies are going to have to turn into hardware companies to be able to understand how deeply we are compute constrained and how much compute is actually needed. You have Anthropic's numbers. You have plenty of evidence and data points to make the argument that we need more compute, which just means the cycle lasts for a lot longer than what people think. But again, to the broader point of why people are pissed off, Bitcoin's not participating, crypto's not participating. So we see all this growth, all this momentum, all this excitement, and all of the traditional assets that are supposed to benefit from that or are supposed to catch a little bit of a bid, they're not, which leaves the entire market incredibly top heavy, which doesn't mean it's toppy, but top heavy essentially means you have, like on a basketball team, you have one or two good players on the team. If the basketball team is the S&P 500, the one or two good players at this point are the semiconductor stocks that are, you know, pumping up the entire market, or the names that are adjacent to these semiconductor stocks, I guess, that is holding up the market. 226 after hours on Nvidia. Amit, do you have that data center watch list? Yes, AIbuildouts.com. I'm going to be adding a lot more stuff to it, but AIbuildouts.com, that should have most of some of these broader data center names that are out there. Again, this is the earnings growth continuing to go up. And it's going up excluding the equity stakes that these companies have inside of Anthropic and OpenAI. So it's like actual earnings growth, not just basic earnings growth. Let's ask this question and then we'll end it off from here. How are people, I guess, navigating same question I asked Sam. How are people navigating FOMO? And Cactus, thank you for that. And how are people navigating trading versus owning? Because I think, you know, Sam made some really good points. Jason said the exact same thing yesterday. There are certain names right here where it's just an opportunity. And you take the opportunity, you don't take the opportunity. You know, no one's holding a gun to your head to take it or not. But the point is there are opportunities, but it's different from the past couple of years, because the past couple of years, every opportunity was more or not an investment because you bought the dip and the dip was rewarded if the company was somewhat decent. In this market, all of the liquidity on buying the dip on a SoFi, for example, is not rewarded. In fact, you go down 10% after earnings because the money goes to a different opportunity, which means you have to be selective with trying to buy the dip. Will, thanks for the super chats. Love you, bro. Enjoy your channel. I think oil is pointing to a global depression. I am not smart enough to figure out if we will enter a global depression with oil. Having said that, I'm happy you sent that comment, because this is my point about the bifurcated attitudes of the stock market right now. You've got someone like Will, who thinks we are going to have a global depression because of oil. And you've got someone like Ankur from Bank of America, who says the top's not in for a minimum of 3 years because this party's not slowing down. That's what makes a market, right? But like these are the different perspectives that exist. I would default to not a global depression because of oil. Because yes, it's above 100, but it's been, you know, stuttering above 100. I don't know if it's, you know, gapping up to 150, 200 anytime soon. If we get to 200, that's a different question. B, I think if we actually get a negotiation to this war, oil hopefully comes down, even if it doesn't go down to 70. C, what's stopping us from that global depression, at least for now, is AI Capex. If that goes away and oil is up, yes, things are going to be ugly. But that's not going away yet. And oil has not become an absolute runaway train yet either into the 150s. And those are maybe two of the reasons things don't necessarily go away. I'm allocating 1 to 2% of my funds for FOMO. I'm not trading at all. It feels like a bubble. It's just so many different perspectives, right? I'm buying Celsius. Dude, I love the conviction on just sticking with the names that people know. There you go, Celsius. Another 6% down on the day. I FOMO'd into 2x SK Hynix. It's like 5% of my portfolio right now. Is that Koru? Which is, no, that's 3x South Korea. That was up 17% today because South Korea was up 6%, 6.3%. I mean, again, there's just a lot of different ways and a lot of different opportunities. Mamba said I took profit on my Micron 800 lotto call for Friday. Yeah, that had to be in the money, right? Dude, Micron earnings, that thing, it's going to crush, but man, it needs to either take it to 1,000 or I wonder how it's going to be treated. We could see that initial 10% decline and then the next day gets re-rated, which is what happened with SanDisk. But at this point, it feels like Micron's ready to go to 1,000, which at that point, it would be trading at 10 times forward earnings instead of 7 times, which, again, is not that expensive given this volatility. Han says, I FOMO'd into Micron finally as a shareholder on Monday. There you go. Mama says, Micron has got to chill. This is just too much. AAOI felt like FOMO at 90. Now I'm up 140%. See, and I think this is also pissing off a lot of people in the market because traditionally the buys that you wouldn't do because it's obviously like irresponsible from a FOMO perspective are being rewarded. And once again, that is punishing the people that are not taking those irresponsible buys. The flip side is, that irresponsible exuberance can obviously be hurt pretty badly, but it's just not in this market, which really, really, really does remind me of 2021. Like anything you did, or I should say rather 2020, because 2021 we ended up topping out in February, but anything you threw a dart at ended up going up. It's just we had inflation boiling under the surface and we didn't have earnings growth. This time we might have inflation boiling under the surface, but it's only because of oil. Like literally, that's the reason. Like this Iran war. If we didn't have this Iran war, I can't even imagine where the market would be right now because we wouldn't even have the overhang of oil. And then you have earnings growth. Donvin says I FOMO'd into BB. I think there's a BB thesis with their QXO platform and their collaboration with Nvidia. If Nvidia comes out and says they invested in them, that would drive this thing crazy. But I don't know how much Nvidia loves this name. It's also not showing up on my option flows as aggressively as some of the other names here. This is how we ended out the day, by the way, for option flows. But it's $6. A lot of people might just jump into it for $6. Nvidia had 5 million contracts, Tesla 4 million, Apple 1.5, Nokia 1 million, which is insanity. That's just crazy. Ford, which for those that missed the story, Ford might be becoming an AI data center play for working with hyperscalers. And that's green. Sorry, QNX platform. Sorry. I was thinking of Steve's stock, QXO, which has earnings tomorrow, I think. Mike, and at what point do we start considering hedging? If you're asking the question, I think it's time to hedge. All right, like if you're feeling that scared, then I don't think it's crazy. Whether that's a covered call, and you just got to be okay with the shares getting called away. Whether that's some puts, some levered ETFs, inverse. And it's not crazy to imagine that some of those hedges, if they go to zero, still means your broader portfolio is doing well. Why is Meta up? Meta introduced some, what did they introduce today? It was a feature for like incognito browsing or something with their AI bot. They also announced an audio model, if I'm not wrong. Meta AI voice conversations. Here's the video for this. I haven't even watched it, but They're still number 5 on the App Store, so it's not like people aren't downloading this. It's just I don't know how much the market cares.
Hey Meta, who built this place?
That's La Muralla Roja in Spain. Ricardo Bofill designed it back in the 70s. A super bold, colorful take on Mediterranean architecture.
So yeah, I think that's why Meta was up today. Nubank has earnings tomorrow. Yes, that is correct. That is correct. Are you preparing any trade or position on Ford? No, not really. But then again, if they become Ford would legitimately become a meme stock unless they increase their earnings outlook dramatically because of some data center revenue that they're expected to have. Like Nokia, you can actually make a telecommunications infrastructure play. And, Nokia's AI business is actually growing 49% year over year. Their top line business is growing 9%, but their actual AI business is growing substantially. Ford is, not really showing that much growth in any sector, but they do have a dividend. But, there was that headline last week that Verizon was thinking of partnering with some hyperscalers on 5G. So, Verizon's a relatively boring company, same with Ford, but, those two names could be super exciting for people. Clarity Act is tomorrow as well. That is also true. That is also true. Any updates on Grab? There are no updates, just like there are no updates on every other stock that is not an AI stock in this market. Like, I think, once again, people just have to be okay with realizing there is no update on Grab or SoFi or Palantir or HIMS or any. There's just no update. There's no, or ServiceNow. There's nothing to say. There's nothing to talk about. There's nothing to do. And I think those CEOs and those leaders of those companies are incredibly frustrated. We already know Bill McDermott is frustrated at this shit, but they're growing as much as they can possibly grow, and people are selling them off probably to get some cash for the Cerebras IPO, which is tomorrow. Like, how do you compete if you're one of these companies when all the liquidity is going to something else? So yeah, they're holding, like Uber, 10 billion of free cash flow. You just crushed earnings, nothing. Down 2% today. You either hold the positions and leave them and don't care about them, or you sell because you're worried about the opportunity cost, which again, Sam, Jason, and I have been kind of talking about that broader thesis. If you sold Rocket Lab right before the pop because you were afraid of opportunity cost, you missed out. But then again, not every company can pull off what Rocket Lab is doing. And, there's also an argument to say it is okay to have some years that are accumulation years versus, DoorDash, massive earnings, pumped up to 170, now down to 149, right? Like, it just cannot withstand the black hole of liquidity that takes away the dollars and allocates them to stuff that is more in line with the market. If this year is an accumulation year for some people in certain stocks, then that's okay. It's accepting the underperformance on somebody like Adobe. I mean, I know this is a very heavy retail favorite stock. It's just not taking off. It's not doing anything. I think Jeremy likes AMD and Adobe. Obviously, AMD is doing a lot better for him than Adobe. I don't think he's selling his Adobe to buy more AMD because he bought a ton of AMD at 100. But he's also probably accepted Adobe's not working this year. And that's a classic example of a portfolio that is doing very well because of their AMD position and is losing on a software position. And so, do you sell the software position to buy more AMD? Probably not, because he did a lot of buying of AMD when it was hated. And I know Jeremy, his philosophy is probably, I'm going to buy the shit out of Adobe because it's hated. And that's it. Like, everyone has their own personal thesis. And so if you think Adobe or ServiceNow are fundamentally amazing companies, let's throw Palantir in there because it's in the software space and everyone hates it, that is your time to buy. Or you go down the Sam route, which is ride the trend. I don't think there's a right or wrong answer. But nonetheless, I think that's how this ultimately playing out. Microsoft and Palantir canceled my gains. Yeah, and it's also like, dude, can you really be upset at yourself? Like, I also think it's very important for people to keep their mental health in check, because this market can be very toxic in the context of your mental health, which is another issue with FOMO. Like, if you bought Microsoft this year, are you really the worst investor on the planet? Like, yes, you missed the memory run. Okay, so did a lot of people. Like 70% of the chat on Friday said they're not in memory. 50% of my audience on Twitter said they're not in memory. So it's like there's a lot of people that are also not in memory. Now, there's a lot of people that are FOMOing into memory, and there's no right or wrong answer on it. There's a lot of people that bought memory when it fell in the March lows. There's a lot of people that bought Rocket Lab or Oracle in the March lows. And, it's just, if you're not in the hottest name ever, and if you bought Microsoft at 350, like Matt Money, he bought 200 shares of Microsoft at 350, those are up. It's at 405. If he had spent that 72,000 and bought 200 shares of Micron, it would be up a lot more. I can guarantee Matt's not losing sleep at night. He really, I would imagine, doesn't care. But also, Matt's not a Micron type of investor. He doesn't buy picks and shovels plays. He doesn't look at these thematics. He buys fundamental companies that he loves to own. And that's how he, got into Rocket Lab in the first place. So I think really you can't beat yourself up too much, especially when Microsoft has crushed every earnings. Palantir has crushed every earnings. SoFi has crushed every. Like, these companies have done their job. There's not much more you can ask of them other than putting up results, and they have. So what else do you do at that point other than let it play out? Elf, yeah, Elf. I mean, I think Jeremy's big on Elf. Like, at the end of the day, yeah, this one's not working. That's okay. You got parts of the portfolio that are working. To have every single stock be a winner in the portfolio is not easy, especially in a year where we are so bifurcated in terms of where the capital is going. But I'm pretty sure, the thesis on Elf hasn't changed, but the narrative has. And the narrative is not the thesis, but the narrative dictates the short-term stock price, which is, what we're seeing right now. Would you buy more Hood at these levels? I have been thinking of it. I was talking to a friend yesterday about it. I just find it, first of all, I have a full position. So once again, this comes down to a question of, do you buy something you're already heavily allocated to on the dip, which if it continues to dip, then there's an opportunity cost there, or do you ride a different trend? And I think because I already have a full position on this, I don't need to, right? Palantir had to get really low for me to finally decide to buy around 123, 124. And, we haven't reached those lows yet, but like Hood would have to get ugly for me to be excited to buy again. Just because the upside right now is not in Hood. It's just not. It's not in Coinbase. Unless Bitcoin goes to the moon tomorrow, it's not in these derivative assets. It's in all the different AI sectors that are out there. And that's what you got. Would you get Jeremy on basis points? If he's ever in New York, yes, I would love to get him on basis points. That would be very fun. Amit, once the Capex spend comes to an end, all these euphoric numbers will come to an end, but that means the hyperscalers are going to start retaining those free cash flow numbers again. Yeah, I agree, but I agree with what you're saying, Doug. The question is, when does the Capex come to an end? And I don't know if it's coming to an end anytime soon. Right? But to your point, when it does come to an end, yeah, Google, when they have an extra couple $100 billion in free cash flow, like that's the day where owning the Mag 7s are going to be the most exciting time to own the Mag 7s, even more than now, because I mean, like, that's hundreds of billions of dollars that are going to go back to shareholders in some capacity. We obviously just don't know when that would take place. Ironically, when Capex comes to an end, we go into recession. That's the bad part. We might go, unless this Capex leads to sustained GDP growth in the age of AGI, I guess, then yeah, basically we are going into recession because Capex is contributing to any growth we're having, which means then the hyperscalers probably will fall. But then they can buy back their stock because they'll have the money to buy back their stock if they're not spending it on Nvidia chips. It's just a very, very different market to navigate than previous markets, but that's what we're doing every single day to try to understand it. If it comes to an end, then margins of semis come down and AI becomes cheaper. Nothing else part of higher and higher levels continue. Well, see, this is the other issue, dude. Micron's operating margins right now, gross margins. Basis points is on Spotify, by the way. If you go to Spotify, search it up, it's there. I uploaded everything 2 days ago. So basis points is on Apple Podcasts, Spotify, wherever you get your audio podcasts. It's all on that platform. Micron's gross margins are 80%. Historically, they peak at 60%. And if you're a Micron investor, you really need to understand this. They have absurdly higher margins than they've historically had in the past. Why does that matter? Because at some point, do the big guys come to them and say, guys, like, we're not going to be paying this much. Like, you're a commodity at the end of the day. Or does Sanjay say, guys, if you want those context windows to keep increasing, you need our shit. You're going to pay us whatever the hell we say you need to pay us. And I think that debate hasn't fully happened yet. In some respect, actually, the chairman of SK Hynix had a great quote the other day, which goes back to the point of not having these massive gross margins. Take a look at this quote. This was actually really important if you're in the memory space to fully understand. According to SK Group chairman who oversees SK Hynix, if companies like SK Hynix do not increase their memory supply, customers will find ways to use less memory by optimizing their infrastructure and software for much lower utilization. This is what we talked about the morning with the Grok acquisition from Nvidia. At present, hyperscalers and AI accelerator makers such as AMD, Nvidia, and others are securing as much memory as possible. This is part of an AI data center expansion, which requires more GPU and CPU and DRAM to support large training runs and maintain massive model inference, now reaching tens of trillions of parameters. The demand has created a supply chain issue where memory makers are selling off all their available DRAM months in advance, but are hesitant to significantly expand manufacturing capacity despite recognizing the increase in demand years ago. Memory makers are the first to notice rising demand, and their reluctance to increase manufacturing capacity is contributing to the current memory storage. However, they are also worried of expanding production capacity as it takes years to build new memory fabs, just as projected demand is expected to stabilize. SK Hynix has ordered 20 new EUV machines from ASML, which will also support future storage production once the tools are operational. However, all of this added capacity is still years away. And so what the chairman said was customers are beginning to use optimization techniques for their AI training runs and inference, which will lead to lower memory usage overall. By using smaller precision data formats and better optimizations, customers can significantly reduce the memory load in their infrastructure. However, one principle in computing suggests that whenever there is an increase in hardware efficiency, software quickly adapts. That's the kind of Jevons paradox stuff. And you're going to need more memory, even if you have less pricing power, because there's more volume. So you got the SK Hynix chairman basically saying, look, if we keep having these massive gross margins, these companies might not want to pay the tax that they're paying on memory. But if we don't increase capacity, we won't have the ability to give them what they need. If we do, we might have less purchasing power because obviously, prices will go down if there's more supply. And so you're in a bit of a weird spot right there, which is like, what happens if the hyperscalers pull down on their Capex or they adjust the way they spend on their Capex by just having better architecture when it comes to this stuff? Doesn't mean to say it's cyclical, but it does mean to say their gross margins, at the levels that what they're at, SK Hynix and Micron might not be as much as they are, over the long term. And Elon has been saying this. Yeah, Elon has been saying this for a while. I mean, I don't even think the hyperscalers like paying the Nvidia tax. The difference is, and we can see that, right, with the TPUs and the custom ASICs and AMD. Like there's been a much larger diversification for the Nvidia tax. But also there is an argument that more of these hyperscalers just have to pay the Nvidia tax because Nvidia's IP is not a commodity, whereas photonics, memory, if this stuff is more commoditized than not, then eventually they might not want to pay that tax. Having said that, Micron's probably still going to $1 trillion. Alex, thanks for the super chat. Do you think this move for Nvidia is already baked in a potential chip deal with China this week, or does that type of deal get it to 250? I don't think the China stuff is baked in. I think Nvidia finally moved with the rest of the semis this week. I think that's what's happening here. I also don't know if the US wants to sign a massive chip deal though, because there's a lot of, concerns. Look, if the market was at like the lows of March right now, I think Trump would want to get a chip deal because Trump would just, find a way to pump Nvidia, and Nvidia is the market. But we're not. Nvidia's at all-time highs. So I wonder if he feels he needs to give the market so much good news. I mean, back when Nvidia was 130 and he went to the Middle East, Jensen, Trump with the Prince of Saudi Arabia, like they made it very obvious that they were trying to make sure Nvidia was going to be taken care of. Now might be a bit different. Why would he travel with Jensen if not? It's a good point. Maybe he just wants to be with the world's most important CEO coming from America. I don't know. I mean, there's a lot of debate internally in the White House, and not from the Democrats, but from the Republican Party in and of itself, on if we should sell these chips to China. And, Trump said he wanted to, but there hasn't been an update on his position in months. We don't really know if he's actually okay with China getting these chips. And maybe this week we'll find out. But so far, we're not exactly sure. Raised my Nvidia price target to 300 because of Orange Man. Bank of America did it to 320 today. So, also, speaking of China, I got to show you guys this chart. So this is part of the reason why Jensen is begging to let him sell into China. But, we're going to see if that happens. China's AI chip self-sufficiency ratio has improved from 10% 5 years ago to 41% in 2025, according to Morgan Stanley, which it expects to reach to 86% by 2030. So China is becoming self-sufficient when it comes to chips. And, Jensen recognized this a while ago, and he doesn't obviously want to have this fully playing out. All right. I think that is it for today. Obviously, if Elon or Jensen signs any deal with China, Tesla, Nvidia could probably get a lot of love. Google above 400 today. Massive move. Google continues to be the best Mac 7 this year. 402 on the close. Amazon has been fading from those 275 highs, but you're still around that 269, 270 range. Nvidia, obviously all-time highs. Congrats to everybody on that. And then you got the S&P, which is also hitting all-time highs. What do you think of the probability of Palantir getting into AI data center infrastructure? I think that's not going to happen if you're talking about it from a hardware perspective. Palantir already has partnerships with multiple construction companies for data centers to utilize their software, which is helping them grow as much as but the market doesn't care, right? Right now, legitimately, hardware assets that are building these data centers are catching the bid, not really the software names. I think Palantir will have its moment again. It's been the star of the market over the past couple of years. This is one of those years where it's not, and it is what it is. It's a different perspective. Palantir basically went up $10 every other week in 2025, 2024, going from 18 to 207 at the peak. This year, that's not happening. This year, that's Micron. That's AMD, right? There are different names that are having that. And because they're in the theme. Palantir was the theme last year with AI. The theme has shifted to AI hardware, and that's where Palantir has been sidelined for a bit. But same thing for the other software names. If Trump can get a cut on chip sales, it's a done deal. Well, he's supposed to get a 15% cut, right? Or is it 25%? It's either 15 or 25%. But that's also true. If he gets a cut, that might get him more excited. Anthropic is raising a $900 billion. That is correct. So the reason why the market's more excited, because remember, when Anthropic raises at $900 billion, they get $30-40 billion of new capital. They're shoving that into all the hardware. They're not giving that to Palantir. They're not giving that to ServiceNow. They're not giving that to SoFi, unless SoFi is underwriting the deal in some way, which would be a massive headline. But it's probably Morgan Stanley and Goldman Sachs. I mean, they're giving it to all of the smaller picks and shovels plays, whether directly or indirectly, that are catching a bid off that money flooding into the Capex life cycle, which will not happen for forever. But if it is happening for the coming years, that's where the money is going. Cerebras IPO, I believe, will be at 1 p.m. tomorrow. So we'll cover it in the morning. We'll see what happens on the market close. But yeah, 1 p.m. we should get the IPO, and then we'll see how the street prices it. All right. Thank you, everybody. Appreciate it. We'll be back tomorrow on the market open. We will keep going from there, see what we have going on. The earnings tomorrow morning are Ondas, Klarna, Lunar, Brookfield, and then after hours, we have Nubank and Figma. So those are the earnings. We have D-Local as well, AMAT as well, Applied Materials. We'll talk about that tomorrow. We'll keep going from there. Thank you, everybody. Appreciate it. I'll see you guys tomorrow on the market open. Bye, everybody.